All right. Good morning, everybody. Welcome back to another episode of the Market Open. We are live. Thank you, everybody, for being here. It is Wednesday, August 20th. Yes, I'm 2 minutes late. I'm sorry. I'm basically doing the amount of comments that I see calling me too late. We had our boy Trump tweeting about Mr. Too Late Powell late last night as well. I think I am the official 2.0 version of too late, but it is what it is. We're live and we're alive. Thank you, everyone, for being here. We've got a lot to talk about today. There is a ton of headlines going on in the pre-market that we're going to get into. Yesterday, obviously, we had price action that was not the friendliest to all of our portfolios. Had to take a little bit of a hit. Had to take a bit of a red day after basically 2.5 weeks of pure green since August 1st. So I want to talk about the implications of that red. If that red continues going into the rest of the week, if it continues today, which I think today is going to be a really big test to see, can we have 2 consecutive days, realistically for the first time since April, of red, like meaningful red across the portfolio? Or do people step in and buy the dip? I think those are important questions that will be answered today. We have Powell on Friday, which I still think is kind of the reason for the overhang on why the market has been so scared over the past couple of days. And we'll get into all those points of reasoning, logic. We had Target earnings. Target is down 10%. Their earnings actually weren't that bad, but they did say the CEO is stepping down. So I think that's what's creating a little bit of, I guess, fear on Target as they're going through a new leadership structure. So we'll talk about those earnings. And then we have some general macro headlines of data that has come out. We have new 13F filing disclosures. We have some housing data that's coming out today. We did get housing starts last night. So we'll be going through all that stuff and seeing how it implicates the broader equity markets as we get into it. Thank you, everyone, for being here. What's up? What's up? Kevin, Tiago, Brian, thank you all for being here. Today is not my birthday. I am sorry for those that are new to the channel and have to deal with the happy birthday spam. It became a meme like 2 years ago of people just saying happy birthday. I don't even know how this meme started, but every day, randomly, people are like, happy birthday. And I'd be like, it's not my birthday, but people will still say happy birthday. So at this point, I'm like 300 years old based on all the happy birthdays I got. But my birthday is October 27th. And now people will just keep saying happy birthday. Like, it's just like, well, thank you for the early birthday wishes. But no, it is not my birthday. But I appreciate everyone being here. I'm Beneficial. What's up? Ray, what's up? Dave, what's up? Yes, we will talk about that MIT report that's been going viral. There's an MIT study that said generative AI is going to fail and 95% of projects fail. And I have some thoughts on it as well. Such in friend of the channel, he put some thoughts on it on Twitter last night. So we'll talk about that as well. And we'll get into those stories. Henry, Duns, Dominic, Blake, Derek, Tim, Jade, Kevin, Uzi. Good morning. Good morning. Marie, Kane, Taizuko, K Park. Thank you all for being here. Let's get started and let's get into it. So I think the way we'll play this out, yes, FOMC minutes today as well at 2 p.m. So I won't be live at 2 p.m., but I'll be live for the market close. The market close will start about 30 minutes early today. So around 3:30, I have a flight to catch at around 7, so I have to leave my house at around 4:45, 5 p.m. We are having Miami this weekend, so very excited to see anyone who comes to the meetup. And so I'll be heading there tonight. So we'll start the market close about 15 minutes early today, and we'll end about 15 minutes early, and then we will keep going from there. All right, so let's get started with an overview on what happened yesterday. Obviously, our portfolios took a hit. I was down about $90,000. It was not pretty. It is what it is. You have some of the bad days. I talked a lot about yesterday around just the general psychology on how to deal with the red day. And the TLDR is that you got to have some pain to have some gains. If you're up 90,000 in a day, it's probably because you were down 90,000 in a day at one point. And for all of us in our portfolios, we have to be able to manage that. However, the most important thing about kind of what happened yesterday is that there wasn't really an answer for it. Like, I can't give a definitive answer. Even when my dad came home, he was like, so my covered calls are printing today, but like, why did the market, I don't even want to say crash because the S&P was down 0.5%, but like the growth stocks of the S&P 500, the beta stocks, the Reddit, Robinhood, Palantir, we'll talk a lot about Palantir in a bit, AppLovin, Coinbase, etc. Those took a hit. And he was like, why? And I was like, Dad, honestly, I don't have a good reason for you. I really don't. There was nothing that Trump said. There was nothing geopolitical. There was no macro headline. There was no massive increase in CPI. I think and I would love to know any reasons that people have in the chat. I think the reason was we have Powell speaking on Friday. As a result of Powell speaking on Friday, we are not exactly sure what he's going to say. You got market participants kind of freaking out that what if he really does become hawkish? The probability for a rate cut right now is 85%. This was 95% last week. What if it goes to 75% if Powell just makes it obvious that he does not care about the labor market? He cares more about inflation. By the way, Goldman Sachs came out yesterday and they said the next BLS revision, if the BLS actually releases a revision, because they have a new director and I don't know what he's going to do, would be about 500,000 jobs, which means we were overstating the amount of jobs for the past 12 months by 45,000. Let's say that happens. Let's say it's even like 100,000 jobs, not 500,000 jobs. Let's give the benefit of the doubt and make it 20% of what Goldman Sachs thinks it's going to be. That is an argument, along with the previous labor revision report that we got, for a rate cut. And I wonder how deeply or seriously Powell is going to communicate that at Jackson Hole, which is the conference on Friday, to the investing community. Because if he says, yeah, I'm more concerned about the labor market, then I think the market will be like, okay, we're getting the rate cut. If he doesn't communicate that, which is what I think is going to happen, but if he doesn't communicate that, I think the market's going to be scared. And then high beta names that are kind of leveraged on the idea that we will get a rate cut are going to get hit. Now, granted, NVIDIA does not benefit from a rate cut. They don't care if the rates get hiked. I mean, there will be some natural, general sort of economic uncertainty, but NVIDIA is NVIDIA. So why was NVIDIA down 4% yesterday? I don't know. Right. And NVIDIA going down 4% yesterday takes the AMD down. It takes a lot of the semiconductors down. So from that perspective, it didn't really feel like there was a meaningful reason for the markets to get hit yesterday outside of the fact that algos took over. People got scared when they saw their Palantir fall 10%. And let's say they bought it at 100. Let's say they didn't buy it at 20. And they're like, dude, it was just at 190. Now it's at 150. I don't want the volatility. I'm done. I'm out. I'm selling my shares. I'm pocketing the 55 shares. I'm up, or $55. I'm up per share. And that's reasonable. That's fair. Like it happens in the stock market, not only from an institutional perspective, but also from a retail perspective. And I think you had the combination of that along with the general fear of Powell. And that led to the sell-off we had. Also, quite frankly, and this is just my opinion, I thought yesterday was very, very healthy because if we take a look at the heat map that we had yesterday, this is basically how the market ended. You had a lot of green in areas that a lot of people aren't invested in. If you're not overly exposed to Caterpillar or the Dow Jones stocks or Coca-Cola or Home Depot or Eli Lilly or Johnson & Johnson, you weren't green yesterday. But if you are, which is not the majority of sort of the growth investing population, which is why yesterday was nasty. But if you are exposed to Verizon heavily, then you had a good day. Now, granted, if you're exposed to Verizon heavily, your year-to-date performance is probably not that good either. But at least it's stable. It's not as volatile. And so you give up extreme risk to reward, or you give up extreme reward when you take less risk. And the level of risk you take is proportionate to the level of reward, many times exceeding that if you're in really good companies. And that is why you have to go through the red days that a majority of us went through yesterday if you're leveraged against any of the assets that you see that are red on the screen. And I think that's okay. I think that is okay. I think it is very healthy. We're going to go a little bit deeper into some of the comments that we had yesterday. We did have the administration say they're thinking of taking a stake in some of these semiconductor companies. That also got the chip stocks a little bit scared. Sam Altman did say yesterday he thinks AI, he didn't literally say it's a bubble, but he said AI is a bit overhyped. My logic against why he's saying that is because he wants people to realize you should not be funding our competitors because they're not going to win. You should be funding OpenAI, which I actually think is reasonable to an extent. And we'll go deeper into like the nuances of his comments. But I think you put all those headlines together along with a random day in August after 2 weeks of green, you get a sell-off. And it is what it is. I just don't think it's that serious. I don't have that much sympathy for feeling scared about it. But I think that's kind of how it played out. And now also, and I will give the Bears some credit right here. You have some froth in the market, right? You got these random Dogecoin treasuries. Chamath launched a SPAC. I mean, in general, that makes people afraid. You have companies like C3 AI that aren't growing, that were up this year. And now they told the market, hey, we can't grow. Big Bear AI, which I think could be a good company in the future, but it guided for negative 19% growth. I mean, when you're not growing and you have a multiple, those multiples get compressed. And it is what it is. And so I think from that perspective, when you have a lot of these names in the market that are Opendoor, by the way, actually, as much as I don't love the company, it was only down 5% yesterday. It's down 3% right here. So this one, classic example of a meme stock, maybe it does make a complete turnaround. But even this being as highly traded as it is an indication of levels of froth in the market. And that stuff gets flushed out on a random day, a day like August 19th. Maybe it continues into August 20th today. That's okay. I just don't see a problem with that. Especially when you saw a bit of a rotation into some of the more defensive value plays. Now, UNH was very confusing to me. I don't know why this one didn't catch a bid yesterday. On a day where Palantir is falling 9%, Robinhood is falling 7%, you would think people would pile into a defensive healthcare name that's obviously undervalued and also as the cosign by Warren Buffett, but it just didn't get that much momentum. So you have little nuances to how this market is playing out, but my takeaway is it was a healthy day for the market, healthy day for consolidation. It hurts on your portfolio, but for that portfolio to get as green as it is, you have to go through some of these red days. And I think that's okay to see that playing out. Okay, Palantir, let's have a conversation on this real quick, and then we'll get into a lot of the other headlines we have going on. Palantir, same sentiment that I am going to kind of give off in terms of the ethos of how I discuss this, which is similar to the rest of the market. It is healthy for Palantir, which was at a $430 billion market cap, to take a little bit of a break. And I know it sucks to feel that. And I feel like I'm preaching to the choir, at least for the people that have understood Palantir. If you bought at 180, I just there's not much I can say to you. I get you're pissed off. But if you bought in any time before this magnificent run happened over the past 2 years, then you understand it's a volatile name, and volatility tends to have volatility to the downside. Now, Palantir investors have been blessed that we really haven't experienced that much volatility to the downside. The last time we really experienced it was February when Palantir got cut in half, but the whole market got cut by 30%. So obviously Palantir was going to take a hit. Palantir, independent to the market, has not necessarily got cut as badly as a lot of these other different stocks. And this is the worst 5-week stretch or 5-day stretch for Palantir since March. So that's why people are feeling it. Not to mention, you've got this guy who is propagating his argument around $40 from Citron Research. So Citron came out today. Again, he is short Palantir, and he is doing whatever he can, Andrew left, to make the rest of the world realize that Palantir is going to $40. The name of his new report this morning was All Roads Lead to 40, this time Databricks. And he goes deeper into, as you can see on the picture right here, why Databricks being valued at $100 billion means Palantir worth currently what, $370 billion, means it is absurdly overvalued and Palantir deserves to fall. And so again, you can have whatever takeaway that you want from that interpretation. If you genuinely feel that this guy is correct, and Databricks and whatever other arguments he's making, ChatGPT, the comparison he made between OpenAI, means that Palantir deserves to go to 40, then guess what? It's a free market. It's a very liquid market. You can sell your Palantir. Like this. It's not like you're getting rug pulled here and you don't have the opportunity to sell Palantir. Like, no, you can sell your. If you agree with his thesis, you can sell. If you disagree with his thesis, which I think there are reasons to disagree with, then you have to be willing to deal with the person who is screaming that Palantir is horrible. This is the same guy who tried to short NVIDIA before NVIDIA 100x'd. This is the same guy who tried to short GameStop, which he would have been right on, but he did not have the ability to hold on to his short and blew up his entire hedge fund. So there will always be people out there screaming about a name you're in. You have to ask yourself, do you have the conviction to hold on to that name? Now, my response to this was based on looking at this line right here on customer count. So his argument is, hey, Palantir is going to do $4.1 billion in revenue with 850 customers. Databricks is going to do $3.9 billion in revenue, relatively the same amount of revenue, with 15,000 customers. And my argument is, wait a second, do you not realize that Palantir is doing basically the same revenue, slightly higher, versus a company that is seen as a competitor with them? By the way, Palantir and Databricks have a partnership. So yes, they compete, but they also have a very symbiotic relationship with each other that has 1,900% more customers than them. So again, you can argue the valuation all you want, but the fact that they're able to produce the same revenue with 1/19 of the customers means there is something very real those customers are paying for. Now, does that deny that the valuation is expensive? Of course not. But my point here, and we're going to see who ends up being right over the long term, is that using the valuation as the key metric for a short thesis without recognizing that a company doing the same revenue as a company that has 19x more customers than them is ignoring the qualitative element of why those customers are paying for the product. Obviously, there has to be something very real because Databricks has a massive sales force. Palantir has like 3 people working in sales. I'm being hyperbolic, but you get my point, right? And they're still able to produce that revenue. So valuation as a short argument historically has not been accurate for Palantir since they began breaking out of the $40 price that Citron is so eager about. And if it was that easy to short Palantir based on valuation, if it was just that simple, this thing would have been shorted to an oblivion years ago. Not to mention, he didn't put up the operating margins as well, which is a key part of Palantir's story. That's one of the reasons it's getting its multiple, because that operating margin is growing like crazy. That's the whole rule of 94. And that means a lot of that net income is going to come to the bottom line. So I am not here defending that the valuation isn't expensive. I think I've probably made a lot of you guys annoyed over the past 8 months since this thing ironically got to $40 by saying, guys, it's getting expensive. Every guest that I have on this show, whether it's Palantir Weekly or whether it's on the Market Open, loves Palantir, acknowledges the nature of Palantir's work as a company for not only just America, but for the rest of the world, but also says, dude, the stock's expensive. And my way to hedge against that has been covered calls, not selling my shares, but selling volatility against my shares. So I don't think there's ever been a defense of the valuation from a quantitative metric, but qualitatively what Arnie, Amir, Matt, myself have tried to do is say, hey, this is why we think the street's paying a multiple. The street might wake up one day and not want to pay that multiple, but this is why. And so with Andrew left, him not recognizing some of the actual qualitative reasons why the street's paying that multiple, he's going to be able to use the valuation as his metric. And I don't think that's going to be the best way to navigate a short thesis. But maybe he's right. I think time will tell. Palantir's down 15% over the past couple of days, probably because he's getting a lot of people to, see his short thesis, but also probably because the market's getting a little bit risk off. And that's why I think we're seeing some of the pain. So for everyone agreeing, for everyone saying, Amit, the valuation is up there, it's like, yes, if you're new to the channel, I've been saying this for the past 10 months as well. I feel like I know this company better than a lot of people, which is why when it hit, I was in India when it hit $40. I was with you guys on the market open when it hit 40 in India. It was like 9 p.m. my time. It was like, 10 a.m. in US time, at least in New York. And I remember ringing the cowbell for 40, but in my head, I'm like, dude, we just turned into an $85 billion company. Like, this is pretty aggressive. And even I was humbled because it was like, we're not stopping at 85 billion. And we went further. So the question now is, do we get to keep this multiple? And even if we don't get to keep $190 stock price, I don't think we're going to 40. And so we're going to have to see how this ends up playing out. But let me say this, if you are scared of Palantir, and Elaine is exactly correct right here about Citron, because of what one guy says, you're not meant to hold individual stocks. And that's just the darn honest truth. And I'm talking to myself when I say that as well. Like, if you are afraid that someone says Robinhood is a stupid company, or Palantir sucks, or NVIDIA is going to zero, and we do have some bearish reports on NVIDIA this morning that we'll talk about, or, SoFi sucks or whatever. Like, if you can't hold on to the name, and some guy out there, some girl out there is screaming that they don't like the name, like, you can't hold on to individual stocks, right? Because the volatility of holding on to those individual stocks can ruin you. Not even from a financial perspective, but just from a mental perspective, like a peace of mind perspective. And so I think these moments are actually important for long-term investors, because you ask yourself, do I actually believe in Palantir? Do I care about this? Or is this Andrew left guy enough to make me scared out of my shares? And if it is, that's okay, but you have to come to grips with that yourself. And I think that's just important for every long-term investor, no matter what stock it is. Palantir is just being the most highly publicized one right now. But if we do go through a bit of a high beta sell-off over the coming weeks, which who knows, that could be possible, that is when conviction is obviously tested at a higher level. So that's what we got in the context of Palantir, and ultimately these are my thoughts. Now, in the context of, look, will it sell off today? I don't know, dude. The sentiment is obviously pretty ugly. I don't go on stock twits that often for Palantir. It's like a forum where people talk about it because it's just a toxic place. But I looked at it this morning, and it's just like a message every second of bearish going to zero, bearish going to zero. It's kind of forming into a contrarian indicator, in my opinion, that there are so many people that are bearish on this that maybe this thing does not tank. Look, could I see it going down below 150 today? Yeah, it's $3 away. People might want to take some profits and secure it, and it is what it is. But I personally am ready for it, and I just I do not have a lot of sympathy for people that are like so upset about a name that they plan to own for 10 years, going up 570% in 1 year, and then having a pullback. Like, that is the nature of life. By the way, if you look at the options market yesterday, Palantir was the number 2 traded stock. And they had 890,000 calls that were traded, 850,000 puts. So you had kind of almost a 1-to-1 ratio between calls and puts. NVIDIA was number 1, Palantir was number 2, Tesla was number 3. Then you had Intel, AMD, MicroStrategy, Opendoor was in the top 10, Apple, Rigetti, Ibit, Hood, SoFi, CoreWeave, Meta, Amazon, Ethereum, UNH, Palo Alto, Microsoft, and Wolf. So Palantir did make the top 2 names for options traded yesterday, which means there's a lot of volatility. There's a lot of action going back and forth. And today we're going to see how this ends up playing out as well. So that's what we got. Now, on this MIT study, real quick, let's talk about this, because I actually think this is a little bit of a piggyback off Palantir. So MIT put this study out yesterday, and the gist of the study is that according to a new report, 95% of enterprise organizations have gotten zero return from their AI efforts. And this is the headline that the bears are running with as the death of AI. Which to me makes me want to buy so many more AI stocks, like the fact that or at least go heavier into the AI stocks that I'm in, that this MIT study is the reason why people are, thinking AI is dead. Because the obvious answer to this is no shit. Yeah. A lot of organizations are implementing AI and they can't get a result out of it. That is actually the bull case for Palantir. Because the reason they're doing $4 billion in revenue off 850 customers, which is nothing in the SaaS space, and Databricks is doing the same amount of revenue off 15,000 customers, is because those customers that implement Palantir actually get results. They get outcomes.
AI works in their enterprise. That's why the biggest companies in the world want to pay Palantir $20 to $40 million a year, because they can't live without it. So 95% of enterprise organizations that have gotten zero return from their AI efforts probably have done a really bad job at implementing AI. And that's okay. That means that whatever company that sold them some piece of software that said, hey, this is going to increase productivity and margins by yada, yada, it's not working. Well, we have a lot of case studies. We have 7 AI PCons over the past 3 years highlighting all of the different use cases that customers are getting. And we've seen 48% revenue growth on Palantir, meaning that's growing in contrast to what the MIT study said, for customers that are getting results from AI spend. And I think that study in and of itself is a reason for why we need to lean into the companies that are winning and lean out of the companies like a C3 AI that are not winning. But I don't think that's bearish AI from any sense. So those are my thoughts. Now, for those asking when I'm buying Palantir, I don't know. I mean, I kind of want to see some of the price action here. Like, I don't really have a number in mind. Again, guys, I've been buying this thing since $6, right? So it's same thing with Hood, right? Like, I'm not that excited to buy Hood. I have a lot of Hood. I have a lot of Palantir. Like, when you have a heavy position, you also have to be a bit careful of when you start allocating capital, when the dip gets juicy enough for you to get excited. So if I had to throw around a number, I mean, for Hood, I would say like 90 and below gets me really excited for a dip. For Palantir, I would say around 120 and below gets me at least more excited for a dip. Now, Hood at 90, the valuation is up there, but it's, you know, much cheaper than Palantir, even at 120. Palantir, if Hood at Palantir's multiple right now, Hood would be at $350, just to give you a context of the divergence of valuation between Palantir and Hood, right? And I understand that. And as a result of that, you know, it means that Palantir obviously is very expensive. But that doesn't mean you just go out there crazy saying, oh, this is my greatest opportunity in history. If I had no Palantir, I could understand wanting to DCA at 140, 130. But if you've been buying this stock for 4 years, if this was the only stock that you were buying when you were broke at 22 years old and every dollar that you had was going into this name, the eager necessity to buy it at 150 down from 190 is not there, but also the ability to lose sleep at night because it's down from 190 to 150 also isn't there. And so I think it's a personal preference for everyone when they're thinking of capital allocation, but that's how I'm thinking of it. In general, to make it more summarized for the entire market, I am not interested in massively DCing in this market because A, I want to see what Powell says. B, we're heading into September, which tends to be just historically weaker on average than August. C, I want to give the market a chance to show me what deals are out there. Like, these are not deals. 190 to 150 is not a deal on Palantir. 118 to 107 on Hood is not a deal. And let me know in the chat if you see any meaningful deals. But SoFi, 25 to 22, not a deal. Amazon, 235 to 226, not a deal. Reddit, 250 to 222, not a deal. Now you would say, wait a second a minute, Reddit's down $30. How's that not a deal? Because Reddit at 250 was pretty expensive, even though I acknowledge Reddit is a phenomenal company and, you know, they deserve to have a multiple based on the growth. So like when you think of it from that perspective, it's, wait a second, what is a deal in this market? Like, what is a real deal? NVIDIA 183 to 175 is not a deal. I don't get excited about that. And if we consolidate at these levels that you're seeing on the screen right here, then I think that's a win for us because that means we're not going further down. We don't have to go further up, but it's also not like a, oh my goodness, I need to buy the dip, unless you have no allocation to this market. And from that perspective, I'm waiting for the market to give me an actual deal. And when I see it, I think it'll be pretty obvious to everybody. All of us will see, but like Meta from 796 to 748, is that a deal? Not really, because Meta was 700 before earnings. It's still $47 above where it was 2 weeks ago. You know, so if you bought at 796, it sucks. But if you bought at 450 in August, like 740 doesn't sound that attractive a deal. Now we get down to 600, that gets a little bit more interesting, but that would require an actual market pullback, not just like a one-off ugly day in August on a Tuesday. And we got to see if that ends up playing out. April was the deal of the year. Yes. And a lot of people took advantage of that. So yeah, those are my thoughts on Palantir. Those are my thoughts on some of the AI studies that are going around. But in general, I don't know, dude. I am not losing sleep over Palantir being down a couple $30. I didn't expect it to. I was talking about this yesterday. We were expecting a Vegas party for $100 Palantir in 2030. We were at 190 2 weeks ago. It's like, it's at 150. It's like, okay. Like, no one that I know that actually cares about Palantir, like, and meaningfully understands the company and has understood the price dynamics and the stock price and has been on the journey, is like texting me, freaking out. Like, oh my God, this is the worst thing. It's like, no, dude. Like, we all knew it was expensive and like it's taking a breather. And it is what it is. So that's what we have on Palantir. All right, let me know in the comments who's buying anything, who's selling anything. Let's also do a poll right here in the chat. Do we think today is going to continue to be red And then we'll get into some of the other headlines. We have CoreWeave. Look, I think CoreWeave is expensive. I know it's down a lot from 150, but the insiders are selling. The IPO lockup is done. So I wouldn't touch it. But then again, what if 93 or whatever it at is the bottom? Like, I don't know if we're making intra-week bottoms on these names. I just think in general, before Powell, it's really hard to touch anything because you don't know what the heck this guy's going to say. CoreWeave right here, $90. Nebius also got hit yesterday because of CoreWeave. Nebius down another 2%. And look, pre-markets look kind of red. I mean, the S&P relatively flat. Ironically, yesterday, the S&P was down 0.5, even though high beta was down a lot more. Even Tesla, which actually had some news this morning. We'll talk about Elon, had some tweets about the Model Y. This one's holding up at 327. This one's not tanking down to the 300s. Like, we have to see if there's really some volatility to the downside that gets people interested. But without that, even CoreWeave at a 90 is just not that exciting here. Okay, cool. So let's move on to a couple of other stories that we have as well. So let's talk about the Max 7 and NVIDIA right here, because this study from Morgan Stanley I thought was incredibly interesting. So Morgan Stanley came out. They made some headlines yesterday. By the way, 78% of you say yes, today will continue to be red. So far, you are correct in the pre-market. We will see when the market opens in about 20 minutes. Morgan Stanley came out and did an analysis of 13Fs, and they said, hey, NVIDIA is the most under-owned stock per institutions. The other three are Apple, Microsoft, and Amazon. Google is also up there, but Google was the most bought stock in Q2. And the most over-owned names are Intuit, Oracle, Dell, and CRM. So ironically, a lot of the institutions are over allocated to SaaS, which hasn't been performing that well, and under allocated to the Max 7. Now, NVIDIA, on a proportional comparison, being negative 2.41% of the 13Fs versus some of the other names that are out there, to me was quite exciting to see, because I think NVIDIA is going to crush earnings. I think they're going to do $48 billion in revenue. I think they're going to guide to go even higher. I think China revenue is coming back. We saw Brett Adcock, the CEO of Figure, take a picture with Jensen Huang. He was at the headquarters. They did a video together. There's going to be a massive amount of chips that are being sold in the robotics industry from NVIDIA. Like, the tailwinds are, tenfold, and I can keep talking about them. But the point is, I think it's good to have a wall of worry on NVIDIA. It is good to have a wall of worry on NVIDIA. I mean, we haven't really had any really negative headlines on NVIDIA for a while. So the fact that the 13Fs are showing that institutions are not that excited to be over allocated to large cap tech, and in particular to be allocated towards NVIDIA, just means NVIDIA has something to prove. And if they prove something at 175 or 180 or whatever their stock is before earnings next Wednesday, then that should lead to a lot of new capital coming in because they've continued to live up to the results. So I don't think that's the craziest thing in the world. But also, at the same time, do I think NVIDIA has to go to $205, which would put it at a $5 trillion market cap tomorrow? No, I don't. If NVIDIA stays at 175 by the end of the year, that would mean my price target of 180 was relatively accurate for 2025. And if that happens, I can't complain because I got a lot of NVIDIA and I got it at $122. So it's like I'm trying to be grateful for the gains that we have without expecting this to add another trillion of value after it already got to a $4.3 trillion company. And I think growing into that valuation, same thing with Palantir and Hood. Like, as much as I think Hood probably should be at like around 125, 130, if it ends the year at 100, if it ends the year at 95, I can't be upset. I just can't. And I think that is important to understand. But NVIDIA will have earnings next Wednesday, and we're going to see what they end up putting up. And we're going to see if they can get the institutions to get more excited about what they are going to be able to do. So that's what we got on NVIDIA. Now, Tesla, real quick, let's cover some of the stuff that Elon was talking about. So he made a lot of tweets last night. Number one, Elon said version 14 of Tesla self-driving feels sentient. He says version 14 is the second biggest update to Tesla AI autopilot after V12. It feels alive. I would hope that version 14 just lets me check my phone once in a while without banning me from FSD like I got banned yesterday. So it would be nice to be able to check my phone during FSD 14. But he did say, look, FSD 14 is being expedited and it should be sentient and feel alive. He also said the variant of the Model Y that was introduced in China doesn't start production in the US until the end of next year. And then he said this, it might not ever, given the advent of self-driving in America. So you also have Elon kind of telling people, hey, we might not have to produce like some massive Model Y for the United States or some new version of the Model Y, because people might not want to own cars because self-driving would just become as strong as it could possibly be from a potential perspective, which would lead to the lack of ownership in cars because everyone would just call it robotaxi. I don't know if that's going to happen, but nonetheless, Elon did get a lot of people to be questioning, if we're ever going to get that new model. And as a result, today he said, hey, maybe it doesn't. So we're going to see. I think by the end of 2026, we'll have a much better understanding of how that ends up playing out. And that's what we have on Tesla. Tesla stock right here, again, 328. I think it's holding up relatively in not that bad of a position. I mean, you had the Model Y introduced in China. We saw the commercial for that yesterday. I don't know how it's going to sell, but they definitely need to compete with some of the other larger models that fit 6 to 7 seaters, or that are 6 to 7 seaters that fit more people. And so if you're a Tesla investor, this thing not being below 250 has got to make you happy for the year. And I know it sucks because it's been dead money, but like the earnings are not good. And Elon said in 2026, the earnings are still not going to be good. You are buying pure potential, and that pure potential is holding $1 trillion market cap that NVIDIA would have to be $700 to match the multiple of Tesla. So it's like the fact that it's even holding these levels, I think, is not the worst thing in the world. Here's a stat as we transition to some of the more macro discussions. Take a look at this. This is from Citadel. Retail equities. Retail have been net buyers in 16 of the last 81 weeks. Retail options are on a 16-week net buying streak, 17 of the last 18 weeks. And institutional options have been bullish in the past 5 of the last 7 weeks. So overall, you have institutional and retail investors. We looked at that chart on the Sunday Future Show that institutional investors bought 3.7 billion out of 5.9 billion worth of US stocks and ETFs last week. You are seeing money continue to be allocated. And that is also where today could be or yesterday could be a theoretical head fake. Now, pre-markets are red, so maybe it continues to be red, but the toots still are underallocated. And the reason the toots are still underallocated is because of what happened in April. And some of them got back in, but the reason that, they just bought $3.5 billion worth of stocks last week, even though last week was a relatively flat week, is because they need to be more allocated. So if you're an institution and you bought NVIDIA at 182 last week, which is relatively where it traded at on average, and now NVIDIA is 175, are you selling your NVIDIA or are you buying more? Especially if you finally capitulated and decided to get into the market. Unless you think there is some massive bear market coming, you're probably holding and buying more. And as a result of that, I think that's why some of these stocks continue to get a bid. That's the other thing that, it's very important to understand as well. Mike Wilson was talking about this yesterday on CNBC. We watched the clip on the market close about a new bull market has started. His argument is that we have been in a bear market theoretically from July of 2024 to April of 2025. And I know that's hard to believe, but I looked at some of the numbers he was talking about yesterday, and a lot of stocks did top out around July 17th of 2024. We had the yen carry trade. We really went a lot lower. We were lower 10% on the S&P 500. We recovered, but some stocks did not fully recover. Then we had that blow off the top in February, but then April had Liberation Day and we had 3 months of pain, or at least 2.5 months of pain before we finally started recovering into where we are today, August 20th. His argument, which is similar to Tom Lee's argument, is that we started a new bull market when everything got capitulated by the end of April. And as a result of that, for there to be a bear market, for people to say, I'm selling my stocks, I'm getting the hell out, Palantir is down 9%, this market is over, you need a catalyst. And very curious to see what people think is that catalyst. Is it COVID again? Is it Liberation Day 2.0? Like, what is that underlying overarching argument on the market that would get people to think I'm bearish? COVID, you had a reason. Yen carry trade, you had a reason, even if those reasons were short-lived. Liberation Day, obviously, tariffs at 75% on Zimbabwe, you had a reason. But those things were resolved in short manner. We've had moments where people would think, oh, a new bear market is starting when you have credit rating agencies taking the United States down with Moody's, when you have bond auctions that are failing, when you have Iran, Israel breaking out. But none of those things actually resulted in any meaningful bear market. Stagflation, I have some sympathy for stagflation. I mean, inflation was sticky on PPI. Growth is doing well, but obviously if the labor market slows down, growth will slow down. And then if inflation doesn't slow down, there you go, you have stagflation. That's possible. I don't see that necessarily in the data yet, because growth on earnings, as I will remind everyone again, every time you're thinking, why is the market trading at these levels? It's because earnings have been spectacular. And as a result of that, if the market ultimately decides to trade on earnings, yes, the market can get expensive, overvalued, but it's getting a multiple because of earnings. And now if earnings were to go away, I would change my tone and be like, dude, the earnings aren't there. You have a lot of macro issues, geopolitical issues, and the earnings aren't there. If the earnings are there, it doesn't mean the S&P has to go to 7,000 tomorrow, but it means you can overlook some of the other concerns, because if NVIDIA keeps growing, Palantir keeps growing, if Rocket Lab keeps growing, if Robinhood keeps growing, AMD keeps growing, it's really hard to be like, I'm going to sell these growing assets to be stuck in cash because of PPI. Like, I just think the majority of investors are not thinking of it like that, institutional or retail. And so again, there has to be a catalyst. And maybe that catalyst is the job market. Maybe that catalyst is Powell not cutting till the end of the year. Maybe that catalyst is Trump getting his lawyers to fire Powell, and then the central bank loses all of its independence and the market gets like there could be a ton of catalysts. Not saying there's not a catalyst. I'm just saying yesterday, I don't think there was some magic catalyst that created the type of pain that people are leaning into as a reason for why we need to enter a bear market. And so as a result of that, I think it was just a pullback. I think it was a healthy pullback, but I don't think it was something as the start of a brand new bear market. Maybe it is. Maybe I'm wrong, but we're going to see over time how that plays out. Now, we did have this headline yesterday as well that is confusing a lot of people in the semiconductor space. U.S. Commerce Secretary Lutnick is considering the U.S. government take equity stakes in chip makers that receive funding underneath the CHIPS Act. It will expand beyond Intel to provide Micron, TSM, and Samsung with equity stakes from the U.S. government. I don't know how I feel about this. Very curious how people think. And I don't know, dude. Like, we're not China. We're not supposed to be interfering with companies and taking equity stakes. I think the argument that, we give them a grant under the CHIPS Act means we deserve some of their equity is kind of BS. I don't think it's real. Like, I think that argument is, like AMD and NVIDIA paying 15% to the United States. I also am not a fan of that. I understand why Trump's doing it. I don't really agree with it, but I understand why Lisa and Jensen were like, all right, screw it. We'll just pay this stupid 15%. So this is weird. This also has NVIDIA down and semiconductors down, because if this becomes a trend, it becomes a question of how this plays out. Now with Intel, I think it makes sense with Intel because genuinely we do need to have more chip security. Like if China were to invade Taiwan, we can't have a world where we're not producing any chips in the United States. And I think that's a national security issue. Intel's already been dead for the past couple of years in terms of its stock price movement. So the United States just backing it up and making sure we are able to produce chips. I can see myself making an exception for a sort of state-based capitalism approach to that. Because like you need chips, you need something to happen in the United States. But if you start doing that with every semiconductor that is not as relevant as Intel or necessarily has the same geopolitical dynamics as Intel, it becomes a bit like, why are we taking a stake in TSM? It's not even an American company. So I don't know. It's a bit confusing, but nonetheless, we're going to see if this actually does play out long term. So that is one of the headlines we had last. Yeah, Samsung, right? So like, why are we taking an equity stake in Samsung? I know they get grants underneath the CHIPS Act, but just because we give companies grants, like we get that money back theoretically, in an earnings growth, because then you get investors to buy into those companies, which is good for the U.S. stock market. Those investors will sell those stocks one day. Guess what? They're going to pay taxes. And then B, those companies themselves have to pay taxes. So that's just helping stimulate the economy, but getting an equity stake as a result of that, like, I don't know. It's a bit weird. But we're going to see how the Trump administration ultimately approaches that. Now, Trump did just tweet 20 minutes ago. He said that one of the Fed governors needs to resign. All he said was this person should resign immediately. And the name of this person is, let me put them up right there. They're a Fed president, Lisa Cook. One of the governors, or she's not a Fed president. She's on the board of the governors of the U.S. Fed, and he said she must resign right now. I don't know why. There's some Bloomberg article that I haven't read about it, but apparently Pulte, the headline is Pulte seeks a mortgage probe. And so Pulte's, I guess, telling Trump that this woman has been doing inaccurate or I guess unethical things in regards to mortgages in the United States, which are at a 4-month low, which is at least nice to see now at 6.47%. And that's why she must resign. I don't know if she's going to resign. I mean, Trump's been calling on Powell to resign for a long time too, but nonetheless, that is what Trump said this morning. Okay, Target. So we did have one of the big retailers give us some earnings today. So let's look at some of those numbers. Target is down in the pre-markets. They didn't have that bad of an earnings. The stock is down 10%, I think, because the CEO is stepping down. So the street's just realizing that there's going to be a new form of leadership on Target. And that could potentially be causing some of the pain. But let's pull up the results right here. So they beat on EPS 205 versus 204, and they beat by 1% on revenue. Now, revenue is down 1% year over year, so it's not really an exciting revenue growth number. EPS is down 20% year over year, but nonetheless, they did beat on the top and the bottom. What's more interesting is what they said. And so the commentary right here from the CEO said Q2 showed encouraging signs of recovery, including improved traffic and sales trends, particularly in stores, and disciplined cost management in a challenging retail environment. And the lead independent director, Christine Leahy, said, it is clear that Michael is the right leader to return Target to growth, refocus, and accelerate the company strategy, which will be the new CEO that they get on target. So again, some of these metrics weren't the best. Store comps down 3.2% year over year. Digital comps up 4.3% year over year. Beauty was flat. Apparel was down 4%. Food and beverage up 1%. Hardlines up 6%. Top line revenue growth was okay. EPS, again, it beat estimates. It's down 20% year over year. So the reason the stock's down, they didn't really say anything that deep about tariffs. I'm going to go through the transcript on the earnings to see if they're like that upset about tariffs. But more so, I think it's because of the CEO transition and leadership and the fact that sales are flat year over year. Walmart is obviously much bigger than Target. Home Depot, again, yesterday reaffirmed their guidance. So you have two retailers in terms of Home Depot and Target that did not have bad earnings. I know Target's down 10%, but the earnings weren't necessarily like bad. It seems like that's the CEO change that's causing it. Walmart's going to be the big one. Walmart and Lowe's. If they can reaffirm their guidance for fiscal year 2025 like Home Depot, then that means maybe the tariffs are not as bad on the consumer. But over the coming weeks, we're going to see that. TJX, I believe they had earnings as well. That stock is up 3.6%. Okay, so TJX had earnings, and they are also a retailer for apparel. Estee Lauder had earnings as well. We'll look at their numbers in a second. They beat on revenue, 3.4 versus 3.41, and then 0.09 versus 0.09 on EPS. That stock, ticker symbol EL, is down 4%. Now it's up from like $60 a month ago, so it's done well. Oh, Lowe's had earnings today? I didn't even know that. Okay, so Lowe's, they beat EPS 433 versus 424. They missed on revenue slightly. Revenue is actually up 2% year over year. EPS is up 6% year over year. That stock, what is that doing? That stock is up 3%. Okay, so Lowe's and Home Depot, two companies that uniquely benefit from the housing market, right? They're one of the ways they're differentiated from other retailers is that when people have refurnishing demand or they buy a new home, they go to Lowe's or Home Depot. Those stocks are up both together about 5% each after their earnings. And Target's down because of the CEO change. So far, the retailers, Walmart's the big one then that we get tomorrow in the pre-market. That'll be one to see how bad the tariffs are really affecting the consumer. But it seems like the market is not scared of the retailers, which again goes to prove that earnings, as we aggregate all the data by the end of NVIDIA earnings next week, have been okay. Obviously, tech earnings have been good, but if some of the retailers are putting up these numbers, then that's not the worst thing in the world. All right, for those saying that I'm pronouncing Estee Lauder wrong, again, these are the same people that didn't understand that it's hay in a needle stack. I had to correct everyone who's new to the channel who just didn't get it. And so I hope those that are OGs of the channel in the chat can help correct some of the new people that are finding the channel around how to actually like say things. Because I think like speaking and pronunciation is important, and like it's sort of the fabric of a democracy if you're able to speak coherently. And yeah, you know, in this chat, we make sure that we actually understand how to speak. So that's what we got. 30 seconds. Palantir, she's down 4% in the pre-market. Let's see how this one opens up. Thank you, everybody, for being here across the world, and very excited to see everyone that is heading to Miami this Saturday. Wednesday, August 20th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. Palantir down 3.47% on the day. Palantir opens down about 4%. We do have some red trying to hold up to 153, but nonetheless, it is down about 2.89% as we get into it. Micron down 4%. There was actually some news on Micron. We'll talk about that later, but that's down 4%. TSM down 2%. S&P flat, literally flat, down 0.10%. Robinhood down 0.5%. Viking Therapeutics, which was down 40% yesterday, that's down, or that's actually up 1%. SoundHound down 1%. Rocket Lab down 1%. CoreWeave below 90, that's down 4%. Nebius down 2%. Opendoor down 6%. Bitmine actually green. BM&R, that's up 1.6. MicroStrategy actually a little green. MicroStrategy had a nasty day yesterday, but it's at 336. Affirm is down 0.5%. NVIDIA now below 174, so that's down $25 billion in market cap because it's down $1. They have 25 billion shares outstanding. That's 25 billion that got slashed off NVIDIA. SoFi right here, that's down 1%. Uber's down 1%. Eli Lilly's down 0.5%. SBET's actually up. You got some of the Ethereum treasuries that are up. Coinbase is up. That's weird. Why is Coinbase up and Robinhood down? Verizon is up. Grab is flat at 501. Netflix is up a little bit. Spotify is basically flat. So Spotify, I think, might mirror Netflix. They tend to trade with each other. Tesla's actually green. That's a bit weird. TJX looks like they crushed earnings. There you go. That's up 7%. That's a retailer, which is, I didn't, dude, TJX is worth 160 billion. I did not know that. I thought these guys were barely worth like 20 billion. So I did not know TJX was that big of a company, but there you go. That's up 7%. Not too bad. Lowe's, they had earnings. That's up 2%. And then Target with the CEO change is likely why the stock's getting hit. That's down 10%. AMD is about to go green. Palantir was at 150.77. Now it's at 153. So you have a $3 reversal. S&P is falling a little bit more, now down 0.2%. So not flat anymore. Hoodie looks like it's about to go green, similar to Coinbase. Opendoor still down 5%. Beyond Meat, that's down. IONQ, that's up a little bit. D-Wave, that's flat. All the quantum names are actually doing okay. Rigetti is down a little bit. TTD, that's up a little bit. Broadcom, that's holding 290, down 1.9. ASML has been on a nice little 5-day run from 700 to 750. Hertz is partnering with Amazon. You will now be able to buy a used car on Amazon via Hertz. So that's why Hertz is up 8%. By the way, Bill Ackman has like 20 million shares of Hertz. So he's probably happy today. But Hertz right there, that's up 8% based on that Amazon partnership. Lowe's right here, 2.64%. Palantir trying to get that recovery. Still down about $5 on the day. That is red. S&P 638, Robinhood again, also still going red, even though it tried to get to 107, now back at 106. Let's look at the large caps. Meta, down 1%. Apple, down 0.5%. The Googs, are we holding 200? We are holding by a thread, 24%, but it's holding 200. That's still also down. Microsoft, which got clobbered yesterday. Microsoft continues to get hit, 508. That's down. Is Tesla the only green out of the Max 7? Tesla just went red, but it's the least red out of all of them. Seems like that's the case. And then Amazon's at 225. Amazon's at 226. So that's slightly up. UNH is up. UNH should be up. It was very confusing why UNH was down yesterday, but UNH getting a bit of green. And then Oscar and Nubank, let's see, Oscar got to 1750 yesterday. Oscar is down 5%. So it looks like that might have been a little bit of a head fake yesterday. Ironically, Oscar going red while UNH goes green. UNH was red yesterday. Oscar was green. So it's kind of like they're trading against each other. And then Nubank 1350. This one had a great earnings. They deserve it. Maybe some international exposure is also why Nubank and Grab could catch a bid. Maybe people just saying, hey, I don't want to deal with Powell and Trump, and Nubank is not affected by that as much. Now, granted, there's tariffs in Brazil and that affects Nubank, but there could be some international bids coming in to some of those names as well. Intel is, wow, down 5%. So SoftBank is getting their shares at, I think, $22. They're putting a $2 billion private investment into Intel. They're going to be getting about 75 million shares at $22. Intel at 23.91. This one has not really been able to hold on to its gain. So that one's down 5%. That was at 26 yesterday. Palo Alto, that one is green. They had a great earnings. They're holding on. And CrowdStrike, that makes me eager for CrowdStrike next week. CrowdStrike also green. CrowdStrike, I think, has been sold off aggressively. Now, CrowdStrike is still an expensive name as well, but if they can crush earnings, then maybe that one continues to maintain its momentum. UNH still holding on to its green, 304, but barely 50 cents away from going red. UNH is very confusing to me. You got the Buffett cosign and you have deep undervaluation, but it's not really catching a bit. Now, look, I know it's up from like 280 last week, but I would think if the market is shifting into the value, UNH is value, right? So theoretically, it should be green. Celsius continues to be one of the best performing stocks of the year, 6130. That's up 1.3%. And that one continuing to be very resilient as well. Where is Palantir? Are we holding 150? Or are we getting a little bit lower? Palantir is 153. Okay, so 150.7 was the intraday bottom today. We're going to have that bottom fall out, and that would take us well below, or at least meaningfully, into the 145 to 149 range. That would be below 150. Psychologically, below 150 would definitely be a big deal for the shorts. But we got to see if Palantir gives up that 153. So Palantir's red in the first 5 minutes. CrowdStrike's green. UNH is red. Celsius is up. Nubank is up. Palo Alto's up. Tesla's up. Again, kind of weird. You would expect Tesla to be down with Palantir just because high beta, but Tesla's green for some reason. Reddit is also down 5% from 250 to 217. High beta. It'll go up, but it'll also go down. And if you have a Reddit thesis for the next 5 years, you can't be that upset, right? You could be annoyed that your portfolio is down, but you can't act like Reddit at 250 was bound to go to 300 because that's just unreasonable. Same thing for Palantir. It wasn't bound to go to 250 overnight. Like, these pullbacks, in my opinion, are definitely not the craziest thing in the world from a consolidation perspective. Google just gave up 200. So Google just went red. It's weird that Tesla's up, but all the other Max 7 are down, given Tesla's the most high beta of those Max 7. Like, this is really wonky price action that I, quite frankly, don't have an explanation for. HIMS is up a little bit. This one got hit yesterday as well. All the quantum names are now starting to go down about 1%, but they were flat. ServiceNow is also slightly flat. Palantir 154. Let's see if it can make its way back up to 155. Intel still down 5. Let's look at the semis. All of them are red except ASML, SMCI, and Lam Research. Like, why is Lam Research the green name out of all the semis? You know, it's like, I don't know. NVIDIA, they're taking her down even more, 173.63. That's down 1.1. Yes, I'm still in my HIMS. I still have 700 shares. Not doing anything much with it other than writing covered calls on it. But I don't know, dude. It's just not become a position I care deeply about in terms of researching. And I know so many people love it, but by the end of the year, I'm gonna have to make some portfolio consolidation choices. And I think we're gonna do a lot of planning sessions in November, December to try to figure out how to manage 2026. But I've also learned about myself, if I just don't care enough about a company's thesis, like I can't buy it because I'm gonna end up holding it, and the only thing it's gonna be used for is selling covered calls. And if that's the point of it, then that's fine. But if I'm buying it, expecting to DCA and build a position, but I don't care about it, then it's just dead weight on the portfolio. And I've been doing a relatively good job this year of making sure there's not dead weight, but HIMS, I just don't care that much about it. So it's dead weight right now. And so we'll see what happens towards the end of the year. Where is Duolingo? Is that one getting hit? Duolingo did fall about 5% yesterday after going up by 7%. Duolingo down another 2%. 334. That one is red. Tesla FSD 14 could be the thesis. Yeah, but that's just Elon tweeting about it. Like, the street's really excited about Elon tweeting. Oh, by the way, the Wall Street Journal came out with an article yesterday saying that Elon is officially done with the American Party. And that actually could be bullish, right? Because then you're like, hey, well, okay, cool. He's not thinking about politics anymore. The guy's super focused on Tesla. And then Elon responds this morning and says, don't trust the Wall Street Journal. Basically, not he's saying, hey, don't take out the possibility that I make my own party, because the Wall Street Journal, everything they say is false. And it's still ironic that the stock is up on Elon not confirming the rumors that he's not going to get into politics. But still, 330. You've got on Tesla. So the Palantir short caused all this tech chaos. I do not think the Palantir short is the reason for all this. I think we're in the middle of August. We had a massive run. Again, Palantir was up 20% this month. It's giving some of it back. Quite frankly, Palantir gave all of it back. We are now at prices we were at on August 4th, which was the day of earnings. And on August 4th, we were still pretty expensive at a $365 billion valuation. We had a blowout quarter. Did that deserve another $100 billion in market cap? I mean, like, no. Could you understand why it got there? Sure, because the quarter was one of the best quarters we've ever seen. But does that mean it has to hold a 430? But like, no, like, we got to be real with ourselves. And I feel like on Palantir Weekly that week, we were all pretty like, hey, like, we don't know why the street's giving us that much more. We understand the quarter was amazing, but it could also go away, and you just have to be able to deal with it. So I don't think it's because of Andrew left, even though he's presenting more media coverage on the short thesis. I think if every high beta name is going down, Palantir is just one of the highest of the high beta names. That's why it's getting hit the worst. But I think it's kind of across the entire board in regards to high beta. It seems like that's what we are seeing. Cybercab in production. I don't know if that's a reason for Tesla to pump, dude. Cybercab in production does not mean that Cybercab is meaningfully going to affect Tesla's earnings anytime soon. Remember, on Tesla, as much as I love Tesla, the earnings are disgusting. This is not a company that's growing, and you're paying for potential. So Cybercab in production is like, okay, cool, but like, how many years will it take for that Cybercab to result in actual earnings, right? So if that's the case, then it's just kind of hype that it's trading off it. Then there's not like a legit reason, which is fair. But I don't know if that's the main reason for why that would be happening. CoreWeave short. Yeah, I mean, if you went short CoreWeave, you've obviously done very well. That's down about 5%. This one went from 150 to 80. You talk about high beta getting hit off of earnings. 180 to 50 or 150 to 80 is a bit ugly. What's going on with AMD? AMD right here, we're at 163. That's still down 2%. So AMD is getting hit with NVIDIA. There was a report that came out a couple weeks ago about the MI450 versus NVIDIA's Blackwell. There was another report that came out this morning saying that report was false and that the Blackwell is still superior against the MI450. I don't think any of those things are affecting NVIDIA or AMD. I think that's just the general semiconductor sentiment going a little lower. Also, software starting to go up a little bit. You did have Salesforce catch a bid. Is Salesforce green right here? Salesforce is about to go green. You might have some overperformance in IGV versus SMH. IGV is the software index that has been crushed over the past 2 months. SMH hit all-time highs last week. So a little rotation out of an NVIDIA and AMD into a Salesforce and Adobe, which are, relatively cheaper compared to those names that have gone on a run. That's not crazy for me to imagine. Jay Powell speaks tomorrow, not today. Today's Wednesday. No, sorry. He speaks on Friday. Today's Wednesday. So we have 2 days until Jay Powell speaks. Today, there will be the start of the conference, but Jay Powell will not be speaking today. Novo, where is that one? Novo right here, 54.32. That one is also pretty flat. And that one's not doing too much either. Figma did get an upgrade today, I believe, by JP Morgan to 85. So they initiated coverage on this one. Figma's still trading at a 40 times price to sales. They're growing at about 50%, $68, $33 billion market cap. They're well below that 135 or 148 peak that they hit, but still up double from the IPO. So Figma, successful IPO, is just the stock again. And again, that's also another argument that explains why we're having a pullback. Like, dude, Figma, which is a great company, was up 5x the day of its IPO. Did that deserve to happen? Probably not. And so when you have that type of froth in the system, guess what? It gets wiped out. And as a result of it getting wiped out, all the things that were leveraged high beta against an IPO going up 5x when it doesn't deserve to also takes a meaningful drawdown. And that's okay. As someone who cares about the health of this market, even though it hurts my personal portfolio, I just don't think that's that big of a deal. Salesforce right here going green, and that's likely a good thing to make the next leg up in this market. You have to have some red to get some green. FOMC minutes are at 2 p.m. today, not Friday. FOMC are at 2 p.m. today, not on Friday, but we have JPOW speak on Friday. Nebius right here. This one's also down about 4%. Look, Nebius also had a great run. I mean, Sam came on the channel last week and he said, look, I wouldn't be buying Nebius at 72, but at 30, when he gave us the initial deep dive, it was a great buy. Nebius, I hate to be the guy who says we got to zoom out, but if you zoom out year to date, it's up 111%. It's down from 74 to 64. This thing could fall back to 50 and still be up 100%. Like, the complaints are just unwarranted. And this is Nebius is one example. Rocket Lab, Palantir, Robinhood, NVIDIA, they're all the same story. AMD was at 75. Okay, it's not at 180, it's at 165. All right. It's very hard to have sympathy for stocks that take a 20 to 30% haircut and are still up double digits year to date, high double digits, if not still triple digits. Like, it's just part of the market. It is part of the market. Did Grab go under 5? There she goes. Grab goes under 5. Again, this one is going to get hit with the algos. If the S&P is down, Grab's going to be down as well. So we're going to see. One thing about Grab that I will say, there has not been any meaningful insider selling in over 3 months, which I thought was very interesting, because when I looked at their 2024 insider selling, there was like insider selling every month. And I don't want to draw too many conclusions from that, but in one respect, you could imagine the insiders are waiting to sell after they announce something, aka what they're doing with their cash. We know they have a lot of cash on the balance sheet. And so, that could be something to watch out for. They had a partnership with Thailand yesterday, the government of Thailand, in regards to tourism and accepting crypto payments. Again, my Grab thesis is the same. It continues to stand. It's just price action. It's going to be hard to cooperate, especially if the entire market takes a bit of a hit. Palantir now down about 3.7, back to 151. If it goes below 150, that's where we see if it really has some pain today. But still at 151, Nubank right there at 1355. BMNR, that one goes down 2%. That one goes down 2%. Admit, not everyone entered at the bottom. I understand that, but at the end of the day, that's a problem with a personal decision that someone has made. Like, if I bought Rocket Lab at 53 for the first time and Rocket Lab's at 40, I cannot have enough arrogance to be like, the market's stupid, not me. Rocket Lab, by the way, 39.56. That's down 3%. I have to be like, hey, wait a second. I bought this thing up 5x from the lows, up 3.2x from the lows. And now I'm mad that it's taking a 20% haircut. Like, and if you can't acknowledge that, like, it is what it is, right? There's just not a lot of sympathy that's out there in the market when that stuff happens. If anything, that becomes a lesson to not buy a stock when it's up that much. I've been through that as well. I've been through the pain. I've done that many times, and it hurts. I literally went through that with Palantir back in 2021 when I started buying at 25 and it went down to 6. I was like, oh, maybe I shouldn't have bought it at 25 when it just almost tripled from the DPO price in like 7 months. But it is what it is. It's how it plays out. Reddit is getting wrecked right here, down 8%. That one going down to 209. Yeah, that's when no crying at the casino makes sense. No crying in the casino makes sense when you buy something super high up and you're not ready for some of the volatility. Like individual stocks is a volatility game. Google right here, 198, Apple 227. All right, Palantir, this is, it just hit 150.63. It broke the intraday low. It made a new intraday low. Now you got 60 cents away from going below 150. If it does, it could be a little bit of a lookout below. VIX is just up 3.8%. So VIX right there, that's an indicator. You might see some more pain. Reddit, which is another high beta proxy, that one down 8% tells me we probably have a little bit more pain in the high beta names. Coinbase goes down below 300. Hoodie should be at 104. Hoodie's at 102. That's down 4%. You are starting to see the 945 dump. NVIDIA, $1 away from 170. So right now, I think literally right now, Tesla 324, you are seeing algos come in and sell things off. And you're also seeing a lot of individual investors probably say, screw it, I don't have the stomach for this. And they're probably capitulating as well. And I think that can explain a lot of literally the downside action that's happening right now. Meta, there you go, below 740. It looks like the day 2 of the pullback is continuing. It's a little too early to tell because it's only 15 minutes in. You could have a reversal. But if you don't, then it's day 2 of the pullback. S&P 637, that's down 1/3%. That's also a nice indicator that it's getting hit. SoFi, are we at 21 or at 20? SoFi 21.55. That one's down 5. Now look, again, this is also important to understand from a psychological perspective. Does SoFi deserve to go from 25 to 21 off whatever headline the world wants to put up as the reason for why this market's taking a pullback? Maybe it's because Powell talks on Friday. I don't think so. Based on the earnings that I saw from Noto, I thought those earnings were pretty damn phenomenal. And I don't think it deserves to go down 20% from 25 to 20. However, SoFi is a publicly traded stock that is in tons of ETFs and portfolios, and retail investors have it. And it might just fall with the market, which is what tends to happen inevitably for any stock. And so managing psychology right there is very important when you're seeing that pain. But nonetheless, that pain tends to be inevitable for pretty much everyone that's in some of these high beta names as well. Who, thanks for the super chat. This rotation is extremely similar to the one in the summer of 2018 where tech and high beta was sold off and banks and staples rallied. Very similar economic and geopolitical climate as well. I would agree. And December of 2018 was very ugly because the trade war got intense. You have people comparing 2018 to right now. The difference is maybe we have some trade deals and that changes stuff. We also have rates that were being hiked at the time. Rates theoretically should be cut versus from December of 2018 to the December of, or the end of 2025. But in about a minute, I'll show you guys the heat map. Actually, no, the heat map should be live. It's been 15 minutes. And let's see if we're getting a rotation. Yes, folks, once again, day 2 of the rotation continues. Take a look at this. Red, Amazon, Apple, Microsoft, NVIDIA, Broadcom, Palantir, Oracle, Google, Meta, AMD, Qualcomm, Micron, Intel, Tesla. Green, Home Depot, Disney, Walmart, Costco, JP Morgan, Visa, J&J, UNH, almost as green. ExxonMobil, utilities, Boeing, defensives, tobacco, beverages, non-alcoholics, Coca-Cola. There you go. I mean, almost a copycat of what we saw yesterday in regards to rotation, which is actually bullish because if that whole screen was red, it would be like, oh, wow, the whole market's tanking. But if like 5 or 10 of the names are red that are the most important names in the market, then that means that money is leaving NVIDIA and going into Home Depot. Now, my money is not leaving NVIDIA and going to Home Depot, but other money in the market is. And as a result of that, it helps you understand why NVIDIA is going to get, wow, Palantir. All right, there you go. Down 5%, below 150. Below 150, 149. So now you are seeing either the shorts pile up with Andrew left, or you are seeing people capitulate. Palantir is majority owned retail still versus the institutional investors. So either the institutions step in right here, or they let it continue to bleed, or retail investors step in, but you are seeing more sellers, obviously, than buyers on this page. Hoodie is that looks like it's about to go below 100, 101. Yep, that's $1. Like, so, I mean, does Hood deserve to go from 118 down to 100? I personally don't think so, but I can't argue with the market if that's happening. Especially at 100, Hood is still up almost 3x year to date. Palantir, same thing. Palantir is still up year to date based on this new drawdown to 148 at this current price, 98%. You know, and I'm not trying to point to the year to date performance as a justification for it. I'm just saying, like, does a stock deserve to be up 150% in a year? Well, if they execute, Palantir has executed, but that doesn't mean it deserves that type of price performance if the market doesn't want to give it that multiple. And today the market's saying we're not giving you that multiple. And that's happening kind of across the board. to a lot of these stocks. Reddit is down pretty bad. Kind of got an ugly down 9% right here. Where's ASTS? Because if Rocket Lab's getting hit, ASTS is also getting hit. Now, not as bad as Rocket Lab. That's down 3%. Rocket Lab is now below the 40s. And if we see a bottom today, yeah, Rocket Lab down 5%, 38.87, then we're going to see it happen all at once. We're likely going to see an intraday bottom and a little bit, not of a full V shape, but a small V, even if the V doesn't complete it to the very top of where we were at 930. And that should happen all at once because that's how a lot of these sell-offs tend to bottom, at least intraday. But these are days where the bottom could be falling out. And this is why the stock market is so emotionally gut-wrenching, because it's like, it could be until 3:55 p.m. Eastern until we see like any resemblance of a bottom, which is very similar to what happened in April. And then after hours, the bottom continues, right? So we're going to have to see how that plays out. Palantir right there, 148.97, down 5.6%. Grab at 480, very possible. It was at 48.80 2 weeks ago, so I could imagine seeing it get there. Micron is also getting dumped harder today, down 6%, because of a report that came out from Goldman. And basically they were like, the summary of it, I'll put it in the chat if anyone wants to read it, but the summary of it was like, we don't see Micron's moat in the memory space, which, again, if you're a Micron investor that knows this deeper, then maybe you understand that better. But they just, essentially their point was, hey, it's commoditized, and that they don't have like a monopoly on the storage space, which they're right about. Does that mean Micron deserves to get hit as bad as this? I don't know. But it looks like that's why Micron is down 5%. Can we see the stock draft? Yes. Let's see. I would imagine all of us are down. But let's see if the orders have changed. So Matt Money, who was in the lead, he's up 15. I'm up 8. Tanner's up 3. Steve's down 5. Chris is down 2. So Matt is still up double me, which is why he's number 1. I'm up a bit more than Tanner. Tanner's up 3. I'm up 8. Steve's down 5. Hims and Micron are hurting him the most, along with MicroStrategy. And CrowdStrike's actually down 13%. And then Chris is down 2.7. So Chris is now 4th. Steve is 5th. Matt, Mitt, Tanner, Chris, and Steve. That is the order right here. So that's what we have on the stock draft. Hood broke 100. Okay, there she goes. 99.75. Look, I said I get interested at 90, but I do have some dry powder, so I mean, we got to see. This is also a day where you can selling puts. Where you can sell puts. Sell puts means you know when stock goes red, people want to pay more for insurance. If you sell a put, you're agreeing to buy 100 shares at a certain price. You get a hefty premium on days that are red for selling puts. However, if you sell a put at Hood at 95, you have got to be, and let me say this very slowly, you have got to be very comfortable with owning Robinhood at 95, because you can get paid a nice premium to own Robinhood at 95 a month from now if you sell a put on it today. But if Robinhood goes to 85 and you don't really like it at 95, then you're going to be upset. So you could sell a September 26th put at 95. You would get paid $6.40 a premium. So that's 640 divided by 9,500 of collateral. That would be a 6.7% return in a month. But you're taking risk for that, because if Robinhood goes well below 89, which would be your break even, then you're losing money, right? So this is when, if you sell any puts, you have to be ready for the consequences of actually taking ownership of those shares. NVIDIA 170.77. It got to 170.12. That one could fall below 170. It's 12 cents away. So we got to see if that one goes down. BD, thanks for the super chat. Hey, Amit, have my first in the money covered call with Altria expiring 29th at 23. Would you just roll it up to next week? Altria, let me take a look at that stock. That stock is worth, how is it? Dude, Altria is at 67. There's no way your call's at 23. Unless you wrote this call a long time ago. Did you make a mistake on that? I think you have to let this go away. The stock's at 67. Your covered call is at 23. Like, you could roll it out a year and try to get up to 50 or 60, but you are deep in the money on that. Unless you meant to say 53 or something. 23 is, yeah, if the stock's double your strike price, you probably just got to let the shares get called away. 63. Okay, you made a typo there. 63. Okay, yes, I would just roll that up a week to, like, I would keep it either at the same price or roll it up to like 70 2 or 3 weeks out. Yeah. So you're in the money by $4. Your break even's probably 65. Not that big of a deal. You are in a very opportunistic position to roll this out either a month, 2 months, a couple weeks, keep the same strike price or inch it up a little bit. But this would be the appropriate time to roll as you are now in the money on your break even. Bitmine 49, grab 492, hoodie getting a little recovery from 99 to 194. SoFi, same thing, 2121 to 2135. Okay, so we have some green candles. This might be the intraday bottom, but we're going to have to see. Reddit bottomed at 206. And when I say bottom, I'm saying that with a grain of salt because the bottoms could not be the bottom, but based on some of this price action, Micron, bottomed at 113. ASTS bottomed at 4250. Grab bottomed at 490. Novo, that one's still going. NVIDIA looks like 170.12. That theoretically could be the bottom. Palantir back to 149.74, 147.62. What time is that? That was exactly 9:55. It's 9:57 Eastern. So 2 minutes ago, again, I'm saying this with a grain of salt, could have been the bottom. I'm just seeing a lot of green candles across the board, even if they're slight green candles, but that tends to happen. And they tend to be quick too. Like, well, at least not historically. Over the past 2 weeks, whenever we've had a little bit of a sell-off, you tend to say in the next like 10 minutes, they all start going up. That doesn't mean they completely recover, but they kind of stop at that point. Today might be different. Today might be like real momentum-based downturn from yesterday's pressure. And so that could be like a head fake. But it will be important to analyze that. Walmart goes green. Big Bear AI, that also looks like so far bottomed at 524. Zillow, 7804. Unity, 3523. That's down 5%. That was at 3487. So that one is slightly up. Where is AMD? AMD right here, 161. That got to 160.37. And that is slightly up as well. So that's what we see in some of this price action. Okay, let's see if we have any macro headlines. We have anything else? Again, there are no headlines today that I've seen that would justify this continued sell-off outside of the pressure from yesterday continuing into today, which is fair. But not a specific headline that I've seen. Goldman Sachs said stablecoin markets could reach $1 trillion. Also, speaking of stablecoins, China today is approving one of the stablecoins that has to do with the yuan. Because they want essentially, stablecoins require buying the underlying asset that they're pegged to. And so that creates a lot of demand for that asset. That's why Basent loves these stablecoins because it helps with treasury demand. So China today came out and said the same thing, that we're not opposed to enabling stablecoins. Now China has banned crypto already. So this would be a little bit of a 180, but as long as it would help their currency, which is going through some problems, they would be okay with it. The US dollar right now, how is that doing? That is at 98.17. That's been relatively flat. You haven't seen that much pain on the USD. I know it's down a lot year to date, but it's been stuck at this 97.98 level. Yeah, stablecoin gold rush, basically. Where is gold today? Is gold moving? Let's see if that's actually... Yeah, gold's up a little bit. You got people that are a bit afraid piling into gold. We'll get money market inflows tomorrow, and we'll see if that continues to be green. But you do have gold catching a bit of a bid. Let me pull up the heat map again. It continues to be the same story. Tech is red, even though tech's recovering a little bit, like Microsoft is barely down. And everything else is green. The VIX is still up a little bit. Fear and greed, I think we're probably still in fear. Or sorry, we're still in greed. Yeah, 57. We're very close to neutral, but we are still in greed. We were at neutral last week, and then we went into higher greed, not extreme greed, and now we're back to, it just changed in real time, 57 to 56. So if we continue to see a little bit of a drawdown, we probably get into neutral. VIX is 16.79. VIX over 20 is when I think you would see S&P like closer to 6,000, or at least like getting up to or down to that level, 610, maybe 615. We're not at VIX 20 yet. So VIX is still holding on. Hoodie, 101.77. All right, so you had 99.32. Now you have 101.74. And again, the other argument around like the nature of the sell-off, Palantir, by the way, back to 150 from 147, is, look, well, let's use Hood as an example. Hood had a phenomenal earnings. Does Hood trade at an expensive multiple? Yes. But this goes back to the Tom Lee argument that I know a lot of people hate, but nonetheless, it is an argument that, in my opinion, is something that investors cannot just dismiss. There is a qualitative element to some of these companies that have uniqueness around them, aka they are one-of-one companies. They're growing like one-of-one companies, They have the execution like one companies. And then the underpinning to his thesis, there's not a lot of good companies to invest in, which is why the IPOs have been getting so much momentum. So the question on Hood is, does it deserve to be trading at triple digits? Does it deserve a $100 billion market, or at this point, a $90 billion market cap based on those earnings? I would say yes. I know there's some people that disagree, but the question then becomes, if you don't give it to Hood, if you don't give Hood that multiple, who do you give that multiple to? Procter & Gamble? Coca-Cola? You stick it into money market funds? It's like, so, and these questions end up leading to capital getting allocated to these names, which is why I think they continue to get their multiple as long as they put up their growth. The other point I really want to make right here is we have not seen any stock in this market outside of Tesla, which is a whole different story, maintain its multiple without the earnings growth. Like, and if I'm missing a name, then please let me know. What stock in this market has maintained like a really aggressive multiple without actually growing earnings? Because I can't think of one. I guess you could say Apple and Tesla, but Apple's still down year to date. Tesla's still down year to date. And those are Mag 7 companies. And, you know, they're totally different spheres of companies when we think of the general market. There's not that many names that have held a really good multiple and then haven't been able to grow. And so the point is, if you're not able to grow, you get kicked in this market, which is a good thing. And you can disagree with the type of multiple the company gets, but if you can't say, well, this company's growing 10%, but they have a 7,000 PE, it's like, okay, you know, this company may be growing 50% and they have a 700 PE like a Palantir, which I agree, I thought 700 PE is up there. But you can't deny it's growing 50%. You might not want to pay 700 times for that growth, but it's not like Palantir's growing 2% with a 700 PE, which truly is peak 2021 stuff. And that's also not what I'm necessarily seeing here. Berkshire is down year to date. Berkshire is down. So, I mean, how much is Berkshire stock? Yeah, actually, no, they're up 8%. Wow, when did that change? Wasn't Berkshire? Okay, so no, it wasn't Berkshire down. Berkshire was underperforming the S&P, which they're still underperforming the S&P, but they're up 8% year to date. Now, again, Berkshire does have a decent amount of Apple, and Apple has started to recover. They were down a bit more, but then Apple went on that 210 to 230 run, so that's helped them. But I wouldn't think Berkshire is an example of that. MicroStrategy is down a lot too. I mean, MicroStrategy has a multiple. Remember, MicroStrategy's multiple is just a multiple on its MNAV, and that multiple has decreased based on all the dilution. So MicroStrategy's, I don't typically classify MicroStrategy as like a growth stock that's getting some egregious multiple. It's just, hey, there's a lot of Bitcoin. People are willing to pay a little bit more than $1 per dollar for that Bitcoin. And based on wholesalers' dilution, they've been actually willing to pay less than $1 per dollar for that because of that, or less than the historical multiple of like 2.2x. Now they're paying like 1.4x for that dollar of Bitcoin, which Jim Chanos has been right about so far. I mean, Jim Chanos started shorting MicroStrategy a month ago. I don't know exactly at what price, but if it was anywhere above 330, he's been right so far. But that's not a typical stock that's like getting some crazy multiple because of their lack of growth. So what are those? You know, what are those stocks that are out there? Quantum. I guess you could make an argument for Quantum. Yeah, these ones. Yeah, this one I'll concede. This one's definitely get some of a multiple for not really having massive earnings. That is fair. Now, the pushback against that from the Quantum people would be this is a whole new emerging market that, you know, is going to change the world. They might be wrong about that. That might just be frothy. But if the Quantum stuff is all frothy and goes to zero, which I don't think it will, but let's say it does that deteriorate this market? Is that the hay in the needle stack that is why the market is egregiously overvalued? I don't think so, dude. These Quantum names, if you put all their market cap together, it's like $30 billion. Like, you know, so from that perspective, is that the company you want to point to as like the most egregious reason for why this market is so overvalued that everything needs to be sold off? It just doesn't seem like that when you look at it in its totality. Yeah, MSTR's MNAV now is down to 1.3. Is that one continues to get hit? I do not still own Webull. I sold that a while ago at $12.50. So yeah, I took that money and I put it into Hood instead. Amit, the problem is that looking at stocks that way is a classic fallacy. We should not be willing to pay an arbitrary price even for incredible companies. Well, it's not arbitrary. I mean, like on Hood, the multiple that you're paying, the reason the Hood just got a 160 price target yesterday from Bernstein is because they did a projected model going into 2027, and they put a multiple, I think it's like 35 times on adjusted EBITDA, or on EBITDA itself, on the earnings or on the EBITDA that they think they're going to be able to do in 2027. So now the question is, do you think 35 times is reasonable for that? That's a subjective discussion. But it's not like, oh, I'm just pulling this number out of my ass and saying, okay, here we go, 35 times EBITDA. Most growth companies that are growing 35 to 40%, you're willing to pay 35 to 40 times on EBITDA because it's like you're not getting that growth anywhere else. And if Hood does not live up to those expectations and they don't grow, Hood's going to get destroyed. Same thing with Palantir. Same thing with NVIDIA. That's kind of the point that I'm trying to make, is like, if these companies have a horrible performance over the coming quarters or years, it is not like interest rates are at zero where there's nowhere else to put your money. You do have the checks and balance of a money market fund where that money will leave and get into something safer. NVIDIA right there, 170.6, 170.12 is the bottom intraday on this. I love the hand the needle stack as a weird inverse expression. It's not an inverse expression. Can someone educate William in the chat? William, I love you, man. And I think you're new to the channel, but it's not inverse, dude. It's like, it's how you say it. I mean, I don't know if you've been through the propaganda of like these weird phrases, but that's, I'm happy you're here so we can correct that. It's not the inverse, but just making sure you understand that. I'm just kidding, William. We came up, I did my amidism like almost 8 months ago, and I said it the wrong way. And then I was like, you know what? This sounds better than needle in a haystack. Let's just keep it. Yeah, Mitt messed up and got embarrassed and ran with it. Exactly. That's what happened. Mitt, are you buying Palantir at this price? No, I am not. 120, I get a bit more interested, but I'm not buying Palantir at this price. But look, it's getting hit right here. 146.74. That was that was not the new intraday low. So we have not hit the new intraday low yet, but we are very close to hitting that. 146.95. That's some of the red that we have. You know, Palantir also bottomed the day, or not bottomed, started to fall the day after Jim Cramer tweeted Palantir to 200. It's almost like the guy is like a genie at doing this stuff. Like literally you put the tweet of his 200, Palantir to 200 on the stock chart, and you start to see it all go to shit. So realistically, the simplest way to explain this is that tweet. Palantir, now you got a new intraday low, 146.67. Now you have a new intraday low. The Nasdaq's down 1.5%, is it? Oh yeah, it is. All right, so worse than the S&P, obviously, because the Nasdaq's tech heavy. But the S&P, there you go. That it's good we're looking at this right now. So the indices are down almost 1%. S&P is like 0.2% away from going down 1%. On a day where the indices are down more than 1%, you just have to get ready for pain across the board. AMD down 4%, below 160. The indices go down. Everything goes down. Reddit down 9%, Hoodie down 7%, Rocket Lab down 5%, Bitmine down 3%, Grab down 2%, Novo down 1%. Lockheed Martin's kind of green. Again, that's a defensive. Walmart's kind of green. That's defensive. Big Bear down 3%, Roblox down 2%, Lyft down 3%, Hims down 2%, Lemonade down 6%. Lemonade was up like 20% last week, giving back some of that momentum. The mega caps, Meta 734, that's down 2. Google 197, that's down 2. Microsoft 507, that's down 1. Tesla now officially goes red, 319, that's down 3. And NVIDIA very close to 169. Never mind, 169 is here. From 184 to 169, folks. That is, if I do the math, $375 billion of market cap that has been erased over the past basically 72 hours on NVIDIA, as this one continues to fall down about 3.5%. And if NVIDIA falls, all the semis, including SMH, probably are going to take a hit. SMH down about 2% right there. Yeah, this is before earnings as well. This is before earnings. So, and you know, I kind of like this, dude. The reason I like this is because I'm like, okay, that means NVIDIA has something to prove, you know? Like if NVIDIA's 190 before earnings, I feel like there's only downside to expect, because like how good of an earnings can they actually put up against the expectations that are already super elevated for them to show momentum? But NVIDIA going from a 4.3 trillion market cap to a $4.1 trillion market cap, the bears will say, haha, I sold at 4.3 trillion, I'm smart. And it's like, okay, but in 2 years, if this is a $5.9 trillion market cap and you never got back in and you couldn't get a return that was equivalent from 4.1 to 5.9 of market capitalization in anything else, then was it worth taking that profit and then having to sell taxes on it? Like, you will have a lot of bears come out of hibernation, as Mr. Dan Ives says, and start to make you think you're the biggest idiot in the world for not selling NVIDIA at 184 without recognizing that they didn't buy NVIDIA when it was at 120 or 110 or 130. And if NVIDIA doesn't get that far below, which it could happen, but let's say it doesn't, the key to actually getting those outsized rewards on the gains is like holding on. which is not some new theory that I'm talking about. This is just the nature of investing over the past 100 years. And I like that NVIDIA's down before earnings. Now they've got something to prove, and you can grow into that valuation if it gets back to 185 because you have better earnings to kind of justify it. And so I don't think that's crazy. You think this is a fake out NVIDIA before earnings? I don't know, because I feel like this is more so a fear of whatever Powell says, and that's why the market's upset. But obviously, if NVIDIA crushes it, then it could become a bit of a fake out. But all multiples are being compressed. And if all multiples are being compressed, that is going to lead to some pain. I just want to make sure people protect their mental, because I, as a content creator, have to deal with a billion comments of, haha, Palantir is down, this and that. And like, you know, I can't respond to every comment saying I was buying this thing at $6, right? So from 190 to 145, I do not lose sleep at night. I genuinely do not lose sleep at night. But you have to deal with those comments. And for all of you that either are going to have to deal with your friends and family, or going to have to deal with seeing other comments if you're just on social media tweeting about stuff, like, yeah, you're going to have to deal with people saying that shit. And you have to protect your mental here, because the bears love to come out when they feel that misery loves company, right? And they're so annoyed that Robinhood is $100, that now it's down from 118 to 100, not caring that most people bought it around 40, 50, that they want to make fun of you and make you feel bad about it. And you just have to protect your mental when you see that. And you have to have enough conviction to be like, okay, that's a nice little comment you made, but it's not really affecting my portfolio or my life. And I have a long-term thesis here. Maybe I'm wrong. Maybe you're right. But based on my thesis, I'm going to go ahead and stick with my strategy. And if you've held on to NVIDIA for a long time, you've kind of have to have that thesis. I mean, Tanner's a classic example of that. Tanner has been holding on to this thing for a long time. And the amount of times people said NVIDIA was dead, Tanner would not be having the portfolio he had today, with 50% of it being NVIDIA, having extraordinary gains, if he did not, you know, understand the noise, like listen to the noise. You definitely don't want to block out the noise, but you also don't read that much into it if a lot of the noise is rooted in people that are miserable, that just want you to be miserable with them. And so I think that is also very important as well. But from a tactical perspective, not a psychological perspective, this is also why the channel talks about covered calls a lot. Dude, I had someone yesterday, so I made a thread on Twitter about covered calls. This thread did get a decent amount of attention. It got 4,000 bookmarks, which is the highest level of user engagement on X. That means people are saving this tweet to read later. And I got a lot of DMs from it. There was someone who messaged me who knew nothing about covered calls. Absolutely nothing. And he made $100,000 yesterday on covered calls. Okay. And he sent me the screenshot. And I was like, oh boy. like, how did you make $100,000? So then he showed me his stocks. He had UNH, HIMS, and BMNR. And then I think there was one other stock. And he had all of them at relatively low averages. I think UNH he had at like 270. HIMS he had like at 42 or something. So somewhere, some of them are at the money. Some of them are well below the current price of those stocks today. And he sold, it's about like a $3.5 million or $4 million portfolio. No, it's 4.9 exactly when I did the math, 4.9. So he yielded 100,000 in 1 week. All of those contracts are expiring this Friday off the $4.9 million portfolio by selling weekly covered calls. And I think the HIMS ones were at 45 and UNH was at 320. And then BMNR was at 55. Okay. So strikes that are relatively at the money, like HIMS is at, today it's down more. HIMS is at 41. But yesterday HIMS was at like 43. He sold it at 45. So it was relatively at the money. They're down a little bit. BMNR was almost at the money yesterday, but BMNR now is at 48. UNH is definitely not at the money because UNH is well below 320. And he made $100,000. And he was like, dude, how is this possible? How is this real? And I was like, this is the world of option selling. You are selling volatility to people that are buying it. And he was like, wait a second. So the worst thing that happens on my UNH, I think he has like 5,000 shares or something like that. The worst thing that happens is that I sell UNH. He has 5,300 shares, 5,300 shares. I'm looking at the screenshot right now. And the worst thing is I sell 5,300 shares at 320 and I get to keep the premium and my average is 270. I was like, yes, that is the worst thing that happens. Or UNH goes to 400 by next week and then you missed out on $80 of gains. Or UNH tanks to like 200 by next week and you're down a lot on the equity, but you still get to keep the premium. And he was like, this can't be real. He was like, there's no way this can't be real. And I was like, no, it's real. It's like, you just used your $5 million portfolio to make 100,000 in a week. Now you can't do that every single week, right? There's been a lot of volatility, yada, yada. Like that's not always replicatable. There is a way in which you can somewhat sustain a return and ROI on your capital versus the amount of income you generate. You do have to be very aggressive on the covered calls. Cause again, if he was being conservative, he would probably make, 30,000 in the week, but you have a big portfolio. So when you have 5 million, the numbers start making sense if you're using that much cash or that much an asset collateral to be able to generate a yield. And he was just saying yesterday, it changed his entire life. So the reason I'm going into this story is because one of the strategies on this channel in regards to dealing with the volatility is covered calls from a real tactical perspective. And a day like this is when those covered calls make a lot of sense. If you got covered calls on Hood at 110 and it was at 118 yesterday, now it's at 99, you're up probably 80 to 90% on those covered calls. You can close them and you can write a new set of covered calls when Hood goes up a little bit to collect some premium. You can't protect against all the volatility unless you're like hedged to a T to the point where you become a hedge fund, right? But most of us are not hedge funds. Nonetheless, we can still manage some of the volatility and benefit from it, even if we're not protected completely to the downside. But not being protected completely to the downside is also why we have a lot more exposure to the upside versus a traditional hedge fund. And I think that's important as well. Palantir right here, 145.30. 145.30. You are down below 150. That is a new intraday low as well for Palantir. Will Trump say good time to buy again? I think Trump would rather say that this is Biden's market before he tell us that this is a good time to buy. But I mean, yeah, this is Biden's market now. This is what happens when we go red. It's Biden's market. Nebius down 7, Figma down 2, Novo down 3, or Nova down 1.3, CoreWeave down 7, Duolingo down 4. Palantir continues to get hit. I am not seeing any meaningful attempt at volume coming in to make this a bottom. 145.17, it's back to 146, but barely back above it. 61 million shares of Palantir have been traded today. Let me check in the options market. Would you buy Duolingo? Look, I think Duolingo for their growth is being widely disrespected. But if high beta is getting sold off, I personally wouldn't buy Duolingo yet because I would want to see how much pain is left in the entire market. I personally wouldn't buy anything, quite frankly, until Powell speaks. And I said that yesterday as well. I bought a little bit of Grab yesterday, about 200 shares of Grab. But outside of that, I really do want to see what Powell ends up saying. And then I think we'll get a lot more of an understanding of it. In terms of options that have been traded today so far, let me see. Right now, yeah, it's NVIDIA, Palantir. NVIDIA, 1 million options traded in the first 30 minutes of trading. Palantir, 627,000. Palantir still number 2. 270,000 calls, 357,000 puts. So you have way more puts than calls. Obviously, you've got a lot of people that are being way more bearish than bullish on Palantir. NVIDIA, you still have 200,000 more calls to puts with a 0.67 put call ratio, 624,000 calls, 416,000 puts. Intel's number 4, Tesla's number 3, AMD's number 5, Apple's number 6, Hood's number 8, OpenDoor's number 7, SoFi's number 9, and Meta's number 10. And then you have Target at number 11 with 144,000 options traded. And then you have MicroStrategy, Amazon, Alphabet, and actually short QQQ. This is another hedge for those that don't know about this ETF. This goes inverse to short QQQ. This was traded 102,000 times today, at least in the options market. It's up 4.4%. And that's going the inverse of the Qs. Powell speaks on Friday, not today. Powell speaks on Friday. Yeah, worst thing that happens is it goes to 0. There you go. That's worst thing that happens is his market goes to 0. If we're not betting against America going to 0, then hopefully this market doesn't go to 0. UNH, I don't know why it's below 300, folks. I mean, I guess the entire market. Well, let's look at the heat map. Is the heat map turning more red? Because then that's just the entire market selling off versus big tech. I mean, kind of it's going more red. You have some of the pharmaceuticals that are, but like in general, defensives, restaurants, industrials, utilities, and real estate are green. Visa, I mean, when Berkshire goes red, that's how you know we're really selling. Berkshire still up 1%. So it's like, yeah, you have some name like a Uber is getting some red, Cadence is getting some red, Arista, Dell, AMAT getting some red, the Semi's getting some red, but overall, it is still more rotation versus fully red across the board. Amit, I got a better understanding of covered calls and options from your one-on-one videos. I've been rolling both up and down covered calls on Palantir every day. There's a decent move making income. Thank you. Yeah, I think when the market does pull back a bit, that's when those covered calls, it hurts like hell when your stock is way above it and you're underwater. But then, that's kind of the point of them as well. They're not a perfect hedge, but they are a hedge. So if you had a 180 covered call that was underwater for the past 2 weeks because Palantir was well above 180, now Palantir's at 140. It's like you remember why you had that hedge in the first place, because you probably thought, hey, 180 is a reasonable price for Palantir to not be above. Well, you were wrong in the short term, and now you're right. And you can effectively manage and roll that 180 down to 160 and still get a decent premium. Which tactically, I think is something, the reason I talk about it so much is because tactically, retail can do this. This is not some complicated strategy you need to pay $1,000 a month for to some guy in some Discord to understand. It takes a few hours to understand it, takes a few months of practicing it, but if you commit to it, like, you can learn these strategies, and it can really help not only for income, but also for hedging when you see some of these pullbacks. Robinhood back to 101, that's down 5, Rigetti's down 6, D-Wave's down 5, S&P bottomed at 633 so far, now back to 635. Maybe that is the low of the day, but that one is still down. Amit is selling grab puts here at $5 for a 20-cent, 4% premium here, a no-brainer. I think so. And quite frankly, it's funny you bring this up, Roland. I was going to do that yesterday, but unfortunately, I have too many call options on grab, and Robinhood won't let me sell new contracts, which they need to switch, bro. They need to stop having a limit on the amount of contracts someone can trade. Like, I think it's just kind of stupid. Like, it's not protecting the portfolio or anything. So it's like, they're not stopping. I think they just like can't handle the capacity. And I'm like, they need to change that. But I would be selling puts here at 5 because I'd be happy to own grab at 5 with 20 cents of margin of safety, right? So my cost basis would be 480. And I want to own more shares at 5. Like, I'm very happy over the next 5 years having grab at $5. So yeah, to me, that's a very easy put to sell, but I just can't sell them. But I would if I could. Sam B, thank you for the $500 super chat, and thank you for the explanation of Chainlink. I have not gone deeper into Chainlink. I only have so much time in the day. I have a lot of things to do. I've been moving out to a new apartment. I really appreciate your enthusiasm on Chainlink, but I just have not had the time to dive deep into it. And if I do dive deep into it, that doesn't mean I'm going to buy it overnight. So really appreciate the super chat. If you want the money back, I'll be happy to send it back. But if you are sending the $500 to get more exposure to Chainlink, I appreciate it. I'm just one human, dude. I got a lot of stuff going on in life, and I have not had the time to dive into some cryptocurrency, which I believe has a lot of potential. I've had friends talk about it. I just personally do not care that much about it. I'm sorry. And so DM me on Twitter if you want the $500 back. But yeah, dude, I'm sorry. I don't care that much, and I have not had a lot of time to care. But I appreciate the super chat. Fear and greed is at 55. All right, that's neutral. There you go. That's neutral. So that is 55 on fear and greed. Wow, US DOJ receives criminal investigation referral related to Fed Governor Lisa Cook. Dude, Trump is, what is this? Let me ask ChatGPT. Let me ask AI. Why did Trump say Lisa Cook should be fired today? I should start doing this more, dude. I like go to Twitter to try to find the answer. I should just be asking AI. It's like theoretically, it should be able to give me the answer, right? VIX is 17. All right, VIX is up. VIX is green. Trump's demand followed accusations by Pulte, the head of the Federal Housing Financing Agency, a known ally of the former president. Pulte alleged that in 2021, Lisa Cook designated 2 separate homes as her primary residence in mortgage documents just weeks apart. One was in Atlanta, the other was in Michigan. He claimed one of these properties was later advertised for rent, suggesting misrepresentation to obtain more favorable loan terms. Pulte referred the matter to the US DOJ. Okay, so this lady apparently misrepresented her residence and as a result got a favorable loan term. She is also on the board of governors for the Federal Reserve. And Trump is now saying that she deserves to be fired because of this. I don't know that much about the legality of this. I don't know if this is a fireable offense. This definitely doesn't look like it's the best thing, especially given the position that she's in. But Pulte and Trump have obviously been trying to delegitimize the Fed as much as they can because they're upset about the lack of rate cuts. And it looks like this is one of their attempts. This one has more juice in it than the $2 billion renovation stuff that Trump was going off about for the past couple of weeks. So this one does feel like an actual story versus the renovation, but that one is down. Yeah, dude, Jose, as soon as I saw Cook must resign, dude, I ran to Apple stock. This was at like what, 8:20 a.m., like 20 minutes before I went live. And I was like, oh, this is about Tim Cook. Like he pissed him off again. And I was so happy to see it didn't have nothing to do with Apple. I was like, Cook must resign? What is it? Like, is this an Apple thing? But yeah, it wasn't Apple. It was Lisa Cook. That's an arrestable offense. All right. So it seems like based on what you guys are saying in the chat, Trump is much more sophisticated on this attempt to, or at least just his accusation that would require someone to step down versus the Powell stuff. But I guess the question is if the DOJ takes this seriously. You know, this is another way that ChatGPT sidesteps media, because I don't pay for the Financial Times. But if I wanted to click on that article, they would hit me with a paywall. So, I mean, we just got the answer. We were just able to discuss the thesis of the story without me having to search on Twitter, without me having to find some source, without me having to do a paywall, by literally asking ChatGPT. And as a media company, I would be pretty pissed off if I was the Financial Times and be like, hey, ChatGPT, if you're going to index our whole article and give the result to Amit so that he can tell everybody, so now everyone else doesn't have to click on the article, like we got to get paid for that. We got to get paid for that. By the way, there is an article that's going a bit viral around ChatGPT. So take a look at this, transitioning a little bit into OpenAI. A Verge reporter spoke to an investor that is investing at OpenAI's valuation at $500 billion. Okay. And this is what they said to justify the valuation. The investor argues that the math for investing at the $500 billion valuation is straightforward. Hypothetically, if ChatGPT hits 2 billion users and monetizes at 5 users at $5 per month, half the rate of things like Google or Facebook, which do around 980 of ARPU, that's 120 billion in annual revenue. 500 billion would be less than a 4 times sales, price of sales on that revenue, which he says that alone would support $1.5 trillion company, which is a pretty good return, just thinking about ChatGPT. Some people are going to agree with me on this, but I don't think this is crazy. And the reason I don't think this is crazy is because ChatGPT has 700 million users right now, weekly. Is it crazy to say they're going to get to 2 billion? Like, it's not happening overnight, but they're definitely getting to 1 billion. And then the move from 1 to 2 should be easier as the network effects scale and as theoretically their models get better to get the extra billion. So, you know, people were tweeting this article like, oh, this is the stupidest thing the investor said. I'm like, why is that stupid? 2 billion is hard to get, but let's assume they get it. $5 a month is a very reasonable ARPU. It's half of Meta and Facebook, or Meta and Google. Which, so the ARPU, I'm not concerned. If he said like $15 a month, I'd be like, yeah, that's a little hard to get. $5 is historically weaker than the big guys. And the big guys have 5 to 6 billion users. Like ChatGPT is not going to get 2 billion overnight, but eventually if they get there, like, yeah, that's 120 billion in revenue. That's not crazy to me at all. So I was surprised that people were saying this investor's stupid. I'm like, look, I don't know if at 500 billion, it's the greatest valuation, but if your math is that 2 billion users times $5 a month gives you 120 billion in revenue, which is trading at less than 4 times sales. I mean, that is not some crazy investment thesis. That makes no sense. Now, if you look at profitability, if you look at, will the models be able to compete with Gemini and like that's a whole different question. But if you assume 2 billion users, I think, yeah, ChatGPT will be worth more. Palantir 144. Okay, there you go. We are seeing more weakness, down 8%. That means we're down basically 19% in the past 48 hours. In the past 48 hours. That's ugly. No way about it. That's ugly. But it looks like the bottom is not easily being made for Palantir. Rango says it'll be way more than $5. 10% of Etsy buys come from ChatGPT. Yeah, I mean, the amount of revenue they will be able to create off agentic workflows, actually doing things for companies, I think should be supreme. I think that will be the business model of all these bots, and ChatGPT has a decent part of that market. You know, they should be able to win. Yeah, 20% in 2 days. 20% in 2 days with Palantir. Mate, you seem so calm about this. How do you stay so calm? Again, like, I don't know what to say other than the fact that if you've been buying this thing since 6 and you did not have, like, I think one of the things that differentiates me from a lot of the like GameStop, AMC, YOLO people, like one of the things is that when Palantir got to 20, I was like, oh, wow, it's a $40 billion market cap. That's like, and you know, we were having real conversations about the valuation. Now, obviously I should have been buying a bit more at 20 because it went on to 6, 7x, but The point is, I've always had valuation as a concern. Not on just Palantir, just on the entire market. I know people think I don't care about valuation, but that's never been the case. I mean, two of my mentors in the market are Steve and Chris, and these guys deeply care about valuation. It's just, at one point they gave up on Palantir and its valuation. So did I, but I kept my shares. And so from that perspective, it's like, look, I didn't expect it to get to 190. So I don't really care if it goes to 144. I understand people are upset about that. I can't be the guy that tries to calm everyone down outside of saying, dude, even at 144, it's a $340 billion market cap. It is still trading at an aggressive multiple. Does that mean I think it's going to 50? No. But does that mean it has to stay at 190? Also no. And I think that's okay. I think that is actually relatively healthy to understand some of this stuff. Amid, just to confirm, there is no thesis breaking stories behind Palantir as a business, right? This is all about valuation bear tax. That is correct. This is all about, I don't even think this is about Andrew left and Citron Research. I mean, that's probably piling onto it. I think this is about the entire market having a little bit of a growth scare as every stock is getting hit. Now, Palantir is getting hit the worst of it, and maybe that's due to some of the short report stuff that came out. And in general, Palantir's valuation is aggressive, right? But there is not some like, oh, Palantir lost a $500 million contract. Like that's not a headline that I've personally seen. And so that's just, if there's nothing fundamental here, then it's more so dealing with the volatility. Do you have a bell to ring on the way down? Every 5% we should ring it down. It would only be appropriate, right? S&P down almost 1%. Fully on the day, 633.74. Let's see how the suits are reacting, dude. We haven't listened to the suits today. You got to have some red banners on CNBC to deal with what's happening today. Let's see how much pain we've got going on here. All right, let's pull some of this up.
How much Google was going to spend at one point. We've been nervous a couple of times about Meta. Obviously, Supermicro and NVDA, in fact, over time.
Well, NVIDIA, I mean, next week, not that it would be unimportant in any market, but certainly will be a focus as it comes towards the last week of August as well.
There's no doubt it's
going to be very important.
And I think it's maybe going to allow us to know if, again, is NVIDIA just going to kind of claim a huge share of the economics of this whole trend?
Well,
I mean, they obviously are, but the market's giving credit. So I keep saying this, giving credit to all these companies that are saying, we'll go without free cash flow growth this year, and we'll just give it to NVIDIA. And that's Microsoft, it's Amazon, and all of them.
It's Oracle as well, which is
exactly
interesting to note. Obviously, their CapEx spend is not close to some of the biggest, but it's large. And to your point, this is a company that generated a lot of free cash flow. Not right now.
Right. And
all right, so the suit's kind of discussing the lack of free cash flow as one of the reasons why some of these high beta names are selling off. We got the OpenAI CFO live. Let's see what she has to say. We were just talking about OpenAI. And kind of get her thoughts on the state of AI and obviously where AI could be going from a financial perspective as well.
Fine, people are very opinionated. They've come to love their ChatGPT. And frankly, as we've released things like memory, it's become more and more your ChatGPT. But as we've come out of the gate, we're seeing actually acceleration in Plus and Pro subscriptions. That's a good sign. People are seeing a lot of value. And we're seeing really nice momentum in the enterprise, great momentum with developers.
Well, that's where I was going to go. Coding and developers. Some people have tried to describe this as an anthropic killer. And so I want to understand what you think has happened in the last week. I know Cursor's obviously taken this on and has made it its default.
Yes.
But what are you hearing and what kind of reaction are you getting from the coding community?
So developer outcome was actually great. I think our numbers were up something like 50% just week over week on the number of tokens and so on being used. What we see is tokens in particular for agentic behavior and so on almost doubled. Reasoning, which is what I get real excited about because that's a place where I think we've really extended our lead, was up 8x in terms of usage of the reasoning components of the model. So
okay, so tell me about this. Sam has a dinner, I believe out in San Francisco.
He does.
And he says at the dinner, though, this is the famous dinner in the last week, where he says that there could be an AI bubble that's taking place. Do you believe there's an AI bubble? And I say that in the context that there's apparently a secondary sale of some of your private stock that some of your employees may be trying to sell at a $500 billion valuation.
So First of all, I think what Sam said and what I fully agree with is we think AI is the biggest thing, the biggest era that we've seen to date, right? Those of us who've had the benefit of living through the internet era coming upon us, mobile era, AI is bigger than all of that. And I don't think any of that is slowing down. You look at infrastructure builds and so on, which you all care about, those stocks. In terms of can there be moments where people invest in things that don't come to fruition? Absolutely. Happens in every era.
So kind of the argument she's echoing from Sam is that there are some companies that are essentially overhyped when it comes to AI. I think this was the extent of the ethos of what he was saying, which is that OpenAI is not overhyped, but OpenAI as a poster child for AI is leading to other companies being overhyped because they're not actually AI names. They're not going to have the transformational value that OpenAI theoretically would have. So this is them basically trying to say, guys, this should be consolidated to a few names, not across the entire market, which I think is a reasonable argument to make when it comes to getting an AI multiple on your stock.
I think that's what Sam was saying, is that there will probably be investments made that are not the best of investments, but we still feel like the AI era is upon us and that we're leading the pack.
AKA C3 AI, right? Like that is the perfect example in the public markets of what Sam is talking about here.
Something actually, as somebody who thinks about that, there's a lot of people who are trying to create startups, AI-related startups, and just other startups. And what kind of moat anybody is going to have around any kind of business in the future, given that arguably, if this works as well as it's supposed to, I should be able to build anybody else's company.
We will go back to her, but we have Brent Thill. He has had a sell rating on Palantir for a long time. He's on CNBC. Let's see what he has to say about this sell-off today.
Longtime Palantir Bear Brent Thill joins us from Jefferies. Brent has a sell rating and a target of 60. Brent, it's good to have you. You actually wrote about this a few weeks ago, in which you called it a disconnect between valuation and achievable growth. Can you walk viewers through your thesis?
Yeah, good morning, Carl. Overall, tech is under pressure across the board. So this isn't unique to Palantir. Everything that we cover is down given the run that we've had up. So I'd say that part of the downdraft is not Palantir related. It's more market and technology plus software related. For Palantir, there's no multiple that's ever been in our coverage universe to sustain this multiple. We've said repeatedly, this is a phenomenal company. This company is executing at a level that no other software company is executing. The challenge becomes the valuation. The minute that they move one way down, the stock's going to be under duress. And we haven't seen a deterioration in the fundamentals. That's not the call. The call is you can't trade at 8 times revenue. There's no precedent. If you put the most expensive software multiple on Palantir, the stock would be $60 on next year's numbers. So, even if you give it the benefit of the doubt, which we have in terms of the price target, you have material downside on the multiple. So this isn't a question of the fundamentals. We've said repeatedly that they're executing better than the majority of the industry and have executed on a rule of 90, which is pretty incredible. Top line growth and margin together equal that. No one else is even close to them. The question is sustainability, and then can they continue the acceleration? But really, this sell-off has really been driven more as a broader tech software sell-off than it has anything else.
Right. Well, yeah, as you pointed out a couple of weeks back, I mean, not even 74 times revenues. I mean, I can remember some multiples like that from the late 90s, Brett, but it takes a while to get back to anything close to seeing that. What about the sell-off in tech overall? I'm just curious. It's August. Retail flows may have slowed. I don't know what you're hearing from your client base as well, but I mean, it is getting pretty significant here, at least in terms of getting some people's attention.
Yeah, on our Jefferies desk, it's basically risk off. We see a lot of the AI winners get trimmed. At the beginning of the year, it was all about macro, right? When tariffs hit, everyone's concerned about macro. We didn't have the macro concern. We didn't have the fundamental pullback. You saw a lot of money move into the group, and then you've seen a pretty material move up. And so I think it's just the magnitude of the move up. If you look still year to date, you've got companies like Oracle up almost 40%, Microsoft still up 20%. You've had really good gains, and I think many don't really know what the shape of the curve looks like in the back half. We don't know what's going to happen with the political environment. There's still concerns around AI adoption. Are we in an AI daze and confusion, and are we going to delay decisions? So right now, I think given the magnitude of the move, this is more of a trading risk off. This has nothing really to do with anything fundamentally that we're seeing.
Right, the underlying fundamentals. I mean, obviously, we got earnings from all the hyperscalers. Nobody changed their CapEx plans other than getting even higher in terms of what they're planning on spending. How important is NVIDIA next week, though, if we continue to see this kind of a sell-off?
I mean, they're bellwether, absolutely critical. We don't see any slowdown across our tech team in terms of the positioning and where they sit. So we don't see a pullback. We've actually raised CapEx by over $50 billion. So to your point, David, we just don't see anything that will cause any type of major disruption for NVIDIA or the enabling AI infrastructure. And that's what continues to work right now in tech, is nothing in the application layer and software. It's all infrastructure. And that's where investors are staying in right now, because we're continuing to see this AI build up. We haven't seen the enterprise adoption.
Sorry to cut in. You mentioned that. I want to get a couple questions here. But software, companies, I mean, is that going to continue to see weakness? The likes of Adobe and many others, their Salesforce, is that a concern to you in your coverage universe, given AI's rise and the agentics and what that may mean in terms of their ability to, to lose share, essentially?
It is right now. Again, I think we're seeing the application group like Salesforce and Adobe down the most. So a lot of those stocks are already embedded. And your concern that you're mentioning, that's in. We don't think the disappearance of Adobe and Salesforce is overnight. We think they're in a better spot than investors are giving them credit. They're the cheapest names in our coverage. So we think if you want to take the opposite side of this, that group has been hit the hardest and probably won't see as big a downfall as Wall Street's expecting. And we just haven't seen AI hit the application layer yet. And that's why, again, all the money's moved out of that sector. It's moved into infrastructure. And again, the energy companies, the data center companies, Microsoft, Oracle, anything is providing enabling infrastructure to let those applications above that infrastructure work. So that's already been embedded. Yeah, we share concerns, and I think those companies are acting. They're taking it serious. They're putting the.
All right. So, I mean, look, the core part of his argument, which has been his argument for a long time, Brent Thill, for those that don't know, has just never liked Palantir's valuation. I mean, he had like a $15 price target on them for the longest. Palantir broke out to 80. He finally increased it to $60. And so he's now sticking with his $60 price target. Again, when he's arguing the valuation, my perspective has always been, yeah, the valuation's up there. The question is, does it deserve to go down 2/3 from here? And that I don't know. That the market gets to decide. But on a day like this, obviously, the people that have been calling out the bearishness on the name will continue to call it out. Now, granted, a lot of his clients have not been into Palantir because of his bearishness on the name for the past 2.5 years. And you would be up a lot if you jumped in during the time he said to not jump in. Now, during the time when you're saying to sell, he could be right that it goes to 60 and then this is the right time to sell. The question is, will he be right? And that we will find out over the coming years. But Palantir right here at 143, it is getting a new low on the day, 143.09, another 9% of a hit right here on Palantir. Amit, I have an NVIDIA CC expiring in 170. Do you think it's a good time to roll now? Yeah. So, I mean, look, Harsh, I think you were the person a week ago that was underwater on this covered call. And now you're not underwater, right? At least to an extent. So, yeah, I mean, one of the good things about these red days is that it gives you a chance to not be greedy. And if you think NVIDIA is going through a slight correction right here, but NVIDIA is not going to be below 170 by the end of the year, now you can roll out that covered call very cheaply, right? When it was at 185, it was hard to, or 183, it was hard to roll it out. You would have had to probably pay. Now you can easily roll it out or roll it down and try to get that, expiration to come back to you quicker based on it falling. So yes, I think now would be the time to roll. I mean, NVIDIA could go down further and it would be even cheaper, but that just depends on how bearish you are on some of this price action. Micron right here down 7%, ASTS down 4%. Let's go back to that OpenAI CFO and see what she has to say around the overall AI landscape.
And break through tomorrow.
So I think a couple of things, when I talk to VCs in particular, I always ask this question because they're thinking about their portfolio. And so what I look for in an investment around AI right now is, number one, are you solving a real problem? It sounds really trite, but sometimes I think people try to solve problems that don't really exist in the world. Second, is there a true business process that's quite complicated? I think in a lot of cases, people are looking for the shiny, bright object, but there's a lot of just hardcore, like in my world, like finance, that now can be done agentically with really complex business processes. And then do you have access to data that is unique? I think the stat is something like, it's a good ChatGPT question, 90+% of the world's data sits behind
Right.
closed doors. It sits in university settings and company settings and so on. And so can you access that in an appropriate way? That's what I think builds competitive moat. But I do think that we're moving in this world, I call it of abundance, where you're right. Like if I want planning software for as a finance person, I don't need to go buy off the shelf anymore. I can build internally the best planning software for OpenAI. Now we still work though with companies like Salesforce. For example, you asked about GPT-5. They were one of our real reference customers. They're using it for Agentforce. And so it's a good example where even the world of enterprise software, they're grabbing hold of this. And I think the leaders will lead by
Okay,
continuing
let me ask you a
deploy
data
it.
question, because
Yeah,
people have
go
also
for it.
talked about if you have the data,
Yeah.
that can be a super valuable component part. I had long thought that Google should be the winner of this whole ballgame because it has my email, it has my calendar going back almost 2 decades practically, right? I mean, it's unbelievable. And yet one of the things that's happened even in the last couple months now is you, ChatGPT, and by the way, Anthropic and others, can effectively port in to that same data stream.
Yeah.
Now, so there's 2 questions. One is, should Google be allowing anybody to port into that data stream? That's what the customers are demanding, so they think they need to do it. I don't know if you would do it. And B, if that's the case, it may very well be that this idea that data is the sort of gating factor. Data will always be the gating factor, but it may be that those who have the data are going to have to open it up to everybody.
Yeah, look, I think when customers say it's not Google's data and it's not, any software data, it's my data, right? This is what I've done with my employees, with my customers, and so on. So we've all built connectors in. It's actually been one of the reasons the enterprise business has been so strong. If you look at our business in the last 6 months, what's really outperformed, ChatGPT has been amazing on the consumer side, but what's really outperformed what I see is enterprise and API. And that's connectors happening. Because again, as people come to work, they expect to be able to do an enterprise search and for it to be able to go look inside of my Slack and my email and my calendar and so on. So it's making it incredibly valuable. And then as we look forward, I think what you're starting to see is memory getting overlaid on top of that. It starts to really understand who I am, both as a professional or as an individual. And you connect that data to what I am and how I like to search. It's blowing open the search market. I think we've gone from something like 6% share overall to 12% in 6 months. And I think that underestimates, by the way, because when you are doing a conversational search in ChatGPT, you probably go back and forth 5, 6 times. That doesn't count as 5, 6 searches, which is what Google would count as. It counts as 1. So I think we're really underestimating how much bigger search is becoming, but how much share we're taking.
Can I ask you a big sort of economic question? We were talking about the Fed and how the economy is going and everything else. And one of the things that's happening is whatever you think is happening with tariffs and everything else, the economy is absorbing a lot. In large part, I would argue, because of the AI boom, the amount of money that some of the big companies, Microsoft, Google, and others, and yourselves are spending on CapEx, and it trickles into the economy in so many ways, whether it's in construction or electricity or engineering or energy or real estate, all of it. This either gold rush, it's either a gold rush or a sugar rush. And how long you think that build out really lasts? Because it may take several hundred people to build a data center, but it only takes 5 or 10 to operate it.
I think we are so in the early inning. I think a lot of prognosticators want to call it like we're on the sugar rush. We're not. It's more like the railroads or the build out of electricity than anything I've seen. The internet, it turns out in hindsight, was actually a relatively CapEx light build out. And so I think we are just getting started. Now we have to do a lot to figure out how to make data centers more efficient, to think about new ways to power them. But in terms of AI, it is voracious right now for GPUs and for compute. The biggest thing we face is being constantly under compute. That's why we launched Stargate. That's why we're doing the bigger builds, as you see, with Microsoft, but with Oracle, CoreWeave, and so on. And we're just getting started.
All right. So basically the argument being, hey, AI is real, but it might not be real for a lot of these other companies that are claiming to be AI companies, which I think is fair. I think that's a fair point. Palantir right here, 143. S&P officially down 1% of the day. And it's not wild for OpenAI to make that argument, which is, I think healthy as well, because they're basically saying, hey, there's some froth in the system, and that froth probably doesn't deserve to be there if they're not actually transforming AI. Okay, so in terms of green across the board, Hertz is green a little bit, Lowe's is green, Target's down 7, that was down 11, TJX is up 4, Taiwan's down 3, Open Doors getting hit down 9. I mean, the green that I'm sharpling, somehow the Ethereum treasuries are green, dude. Is Ethereum still up today? Ethereum is, dude, that's kind of weird that Ethereum is up, but Ethereum is up. You would think Ethereum would be like, a beta play to the downside. But that's not really, I mean, I know it's down from like 4,700, but it's up today. So is Bitcoin up as well? Bitcoin's up as well too. So it's weird. You would imagine NVIDIA, Palantir, Hood, Google getting sold off, that Bitcoin crypto would as well. For some reason, that's not. S&P down 1% doesn't tend to see Bitcoin up 0.5%. But you are seeing this. It's a Tom Lee psychological bottom. Yeah, I mean, look, his thesis on Ethereum has not changed, even if the price action has changed. So you might have some people just getting excited to buy the dip on that as well. We saw this headline last week, and this could have explained some of the Meta decline. Meta's looking at downsizing their AI division. This to me wasn't necessarily Meta giving up on AI or anything like that. It was more so Meta's restructuring the amount of people that they have working on AI to make it way more consolidated. So I think this headline was a little misreported by people. They're like, oh, Meta's like canceling their CapEx. It's like, no, Zuck's is spending as much as possible. They're just not going to spend in places that they don't need to spend in. Like, instead of getting 50 researchers, they're getting 20, but they're just making sure that those 20 researchers are worth what they're paying. So I don't think that was the worst headline. I think Meta's getting hit more, frankly, because it had a good run after earnings. Went from 700 to basically 800, 796. So it's giving back some of those gains. Also, again, it is very healthy in a market where you need to make a next leg up to also take one leg down or even two legs down, right? Like you kind of have to have some of that to go. This is what we were talking about Friday. You don't have this ability to keep going higher unless you have a wall of worry, and that wall of worry leads to a heightened pullback. We've seen this historically. Because you need to have some people say, hey, this is not good. And as a result, that creates the momentum eventually to make new highs. Like it's just happened over and over and over again historically. And this is the first time in, I would say 2025 since Liberation Day, where we are finally seeing that type of pain. We had it on August 1st, and then it just completely recovered within 2 weeks. We're not as bad as August 1st, though. August 1st, S&P was at 618. We're at 633, so we still have a long way to go if we are going to match and completely get rid of all of August gains. Also, we all knew going into August, NVIDIA right there did touch 168. Now it's at 169.30. That August was going to be weak. We had 2 weeks of no weakness. We have a week and a half left of August. Does that turn weak? We'll see. But you are seeing some of that weakness right now. Yeah, it was misreported. They're reappropriating resources from Reality Labs' AI division. That could be a headline that triggered some people to sell, but it just really wasn't the type of headline on Meta that was interpreted the way it should be. MasterCard, that is up 1%. That is up 1%. Visa also catching a bit of a bid, 346. Let's go back to the heat map and see what we have. If we're seeing some more red. No, it's the same thing, guys. It's the same thing. I mean, you maybe see a little bit of a pocket of red here and there, but overall, it's defensive's green, tech is red. Now, the S&P goes down 2%, you probably see a lot more of a sell-off, but you're not really seeing that yet. Every year has to have some nut punches. If you don't know, there's your toppiness max. Yeah. I agree, dude. And look, on this show every day, we've been talking about the uneasy feeling of toppiness, in particular, the Chamath SPAC. And so now that toppiness is resulting in some froth getting kicked out, which, maybe Chamath doesn't put out a SPAC if the environment changes, which means we're less toppy. Maybe some of these Bitcoin treasuries aren't easily able to raise more money at 0% to buy Bitcoin, right? And that stuff being washed out of the system, I do not think is a determinant factor on the entire market collapsing like 2021 going into 2022. Maybe I'm wrong. But that seems more like froth getting flushed out, which is a good thing with a fundamental earnings backdrop that is not deteriorated. And maybe in Q3 it does deteriorate, but we're going to have to see, right? Like so far in Q2, we can only look at those numbers. Those numbers are pretty good. And we would have to see a bit more of a dramatic change to if that potentially changes. Also, we got to see if we get this damn rate cut. That will be, obviously one of the most important things as well to see if that plays out. Okay, let's see what else. Took a while, but it came around. Yes. Took a while, but some of this toppiness came around. Ives said I bought NVIDIA. Oh, wow. There you go. We have a first. Okay, so let's ask this question. Who is adding to a position for the first time today? Not DCAing, who is adding to a position for the first time? We got Ben, who's into the NVIDIA club at 169. These look, I don't know if this is the bottom on the market, but these are days where if you want to nibble at a new position, then it is a better opportunity. Nick says I'm adding Lyft, not Baltic said at Oracle. Where's Oracle? It was at 250. Now it's at 229. All right. So you got a haircut there. CoreWeave, Brandon said I bought 100 NVIDIA. Visa, bought some more Bitcoin. Slivu adding Micron. All right, so a lot of these candidates that maybe people have not bought before, have the opportunity to. Buying 4. Tanner likes 4. Shift 4. He's a fan of that one. Their insider, their CEO just bought a ton of stock as well. Added Duolingo. I don't hate that. A couple people saying they bought some Palantir. Where is Palantir? Are we still holding 140? Or are we in the 130s yet? We were holding 143. 142.34 was the low as of now. Down about 8% still on the day. By the way, there was no insider selling yesterday on Palantir. Nothing was disclosed. And there hasn't been insider selling in like a month and a half. So this is definitely more institutional / retail. But this is not insiders taking profits here. I have a pretty low average on Palantir, but I still haven't built out the number of shares I want. I'm thinking of nibbling at some more shares. Yeah, and look, when it comes to averaging up, the question becomes, do you think this is a good price you're paying to average up? And if your average goes from like 20 to 40, is it worth increasing that average based on the price today? And that is a question everyone has to think for themselves. One of the reasons why averaging up to me is not the scariest is because, and again, going back to this, if you're able to sell calls against your position, you are constantly able to reduce your cost basis if you can effectively manage those calls against your equity. Which means, yeah, you might buy it at 144, but if you do a month of covered calls, that 144 actually becomes like 135 or 138 as your actual cost basis. It's not the worst idea in the world versus waiting for 138 if that 138 never comes. S&P right there, 633. That one is still down 1%. Would you buy a leap on Palantir? No, I would not buy a leap on any of these names. Now, maybe this is a great day to buy leaps, but again, the time to at least when I was levered into leaps outside of Grab, because I'm still in those, and SoFi, is 2023, right? When things were really dirt cheap. SoFi leaps at 7, Robinhood leaps at 8. I don't see that right now. In fact, I sold all my Robinhood options at around 60, and I had strikes for 100. I would have been deep in the money, or at least somewhat in the money, if I had held them, and those were expiring 2027, but I didn't want to deal with the volatility. I'd rather own the stock. So I am not a fan of leaps right now, unless you really think there's asymmetry. So for Grab, I really think there's asymmetry. I'm a fan of leaps. But unless you think that name is going to make a move after it's already made a big move, which is one of the reasons I sold Robinhood at 65, because it was up 2x. I'm like, dude, I can't be that greedy to expect this to get to 100. Do I think it deserves it? Yeah, but will it actually get there? I can't, say I'm 1000% confident. And so that's why I got rid of some of my leaps. But not a fan of leaps here right now, unless it is deeply undervalued. Yeah, Ethereum really is showing resilience, dude. Did not expect Ethereum and Bitcoin to be as good as they are today. But they're holding on. They're holding on in a way that's actually quite interesting, because you just didn't expect that to be playing out the way it did. We do have Dan Ives. Let me see what Mr. Dan Ives is saying. Again, he likely continues to be bullish on the stock market. So let's pull up Dan Ives right here and see what he has to say. Josh says I bought 200 hood at 102.5. I don't hate that either. Again, I don't know if Hood has to go down to the 90s, but I bought it like 104 a couple weeks ago. So based on their growth and their catalyst, to me in the low hundreds, it is a fair price. But obviously momentum can go to the downside and then you could see a bit of a hit. All right, here's Dan Ives this morning.
Here with this idea that we've had, anytime you have a big rally, you're always going to have these daily pullbacks, even weekly pullbacks, if you will. That doesn't necessarily mean the rally is over. And I do wonder if you see enough fundamental case there for this rally to reset and continue.
Yeah, look, I view it as a bump in the road because it's our view. When you think about AI revolution, you're just continuing to get validation from earnings and from everything we see from the data center, as well as just overall demand. We'll see that from Godfather of AI, Jensen, NVDA, as we go into next week. And look, I continue to view this is a 1996 moment, not a 1999 or 2000 moment. And that's our view. I mean, this is a tech bull market that will continue to rage on in second half of the year into next year, given we're talking about a fourth industrial revolution that we're actually just living through.
When we talk about that fourth industrial revolution, everyone, of course, wants to know how that includes stocks other than, say, NVIDIA or Microsoft. I know we've talked about this before, the idea of the AI trade broadening. And it does appear investors are hungry for that, looking for who the next beneficiaries of this are going to be. Are they visible yet?
I think they're starting to be visible. I mean, we have our AI 30 list where we talk about the derivatives. It's not just, look, of course, it's led by NVIDIA, it's led by Microsoft, it's led by, big tech, Meta, and others. But now it's second, third, fourth derivatives. Nebius is a good example. You never would have talked about them a year ago. You look what's happening on cybersecurity. You never would have said it as an AI name, Palo Alto, CrowdStrike. You look on Palantir. 2 years ago, no one talked about it. A year ago, maybe, haters would talk about it. Look what's happened there. And the sell-off today, I just view as just a small bump the road to what I believe is $1 trillion market cap next 2 or 3 years. So my view is, and that was a great illustration when you talked about, it's going to spread. Second, third, fourth derivatives. And I always say, when the bears are in hibernation mode, they can see AI in the spreadsheets.
One thing that I found interesting about the rally, certainly this particular year that we've been in, is sort of the participation that we started to see amongst old tech companies. We talked a lot in the past on this program about Oracle. Today, we take a look at Intel, and I know Intel has a lot of issues. But to see not just so much the rally in the shares today, but the vote of confidence that Masayoshi Son and SoftBank had to put up $2 billion to invest in this company. Do you think Intel is going to find a spot in this with AI revolution, tech revolution, whatever you want to call it?
Look, I think the problem is they're just years behind, right? In terms of, you look at what Intel has done the last few years, has been just a massive black eye. Now, clearly, like SoftBank vote of confidence, obviously U.S. government, that's a little, call it obviously a champagne moment today. But I just think this is an Everest-like uphill battle. They're years behind other competitors when you look at NVIDIA, AMD, TSMC. And I just think, look, there's a better chance of me playing Ryder Cup Bethpage in September than Intel catching these other chip players. And that's the reality.
So what?
All right. So again, Dan Ives, same argument, which, look, I know it's a simple argument and people think sometimes the analysis is rather, simple to say the least. But I think his argument is this is a fourth industrial revolution when it comes to AI. Companies will win, and you have hiccups along the way for companies being able to win, which is a 2-day hiccup, ugly hiccup, but it's a hiccup. Is that a thesis breaker? I just don't think so. And if you think it's a thesis breaker, either you sold already or you never even got into these stocks. But if it's a hiccup, then that's just the nature of volatility that everyone has to deal with. S&P right there, 633. UNH is actually below 300 now. Again, very surprising. I do not think this price action on UNH should be understated. This is a day, at least the past 2 days, where value should catch a bid. Deep value, which I don't care if you like UNH or not, you can agree that a company with a $260 billion market cap doing $22 billion in free cash flow is deep value, especially when it was the 15th largest company on the planet before this. Why is that not catch? And then it just got co-signed by Buffett, Tepper, and the Saudis and all these big hedge funds was the number one most bought stock. Like, I don't understand that price action. And it makes me think the guys that sold UNH to Buffett at probably 320, 330 when he started buying, they saw something that he didn't see. Now, maybe Buffett's going to be right long term, but at least in the short term, it is very weird that UNH is not catching a bid. Just even from a pure, like people are afraid perspective, they're just going to go pile into something safe. There you go, UNH, just to even park your money. But that's not happening. It just ran 20% in 3 days. Yeah, but dude, did it deserve to go to 237? And also the run to me is irrelevant because the run happened because of Buffett and the 13 Gs, 13 Fs, right? So that's a natural pump. This price action on the 19th and the 20th of August is completely separated from what we saw on the 15th of August. The 15th of August was a one-day introduction to the market of information that they didn't know before, which is that super investors are loading up. These past 2 days should be a continuation of a tailwind for a stock like UNH because of growth selling off and value catching a bid, but it's not. And that part to me is confusing. Unless it legit is just consolidating, which could happen, but you can't ask for a better macro setup for UNH to catch a bid right here. And that's the weird part about this one. We are seeing a little bit of a green candle. Hoodie 104 from, what did it go to? 99. So there's a little recovery. Palantir from 142 to 146. The S&P from 632 to 634. BMNR from 47 to 48.30. NVDA from 168 to 170.8. Tesla from 314 to 317. So this is what, 11 a.m. Maybe you're seeing another attempt at solidifying an intraday bottom. They tried to do that at 1040, ended up getting another bottom. I think we're trying to do it again at 11. We might still end up getting a bottom. Coinbase from 292 to 300. Grab from 491 to 497. Rocket Lab 3820 to 39. SoFi 2121 to almost 22. And then Ethereum still catching a bid. So we're going to have to see if there's any legs behind that level of potential bottom. But that is what you got. You can't equate UNH to Coca-Cola or J&J. I'm not trying to. I'm trying to say UNH is, quite frankly, better than those two stocks in terms of its multiple that you're paying for. Which is why I'm saying, like, look, they are still in that value healthcare defensives bucket. That 1000% UNH is part of it. It's just sold off the worst out of all the other names in that bucket. So then the question becomes, on a name where everything high beta is selling off, why isn't that bucket catching a bid? Well, that bucket is catching a bid, but UNH isn't. And that, I think, points to the DOJ risk, which is like, I don't even know how serious of a risk that is, but nonetheless, it's like almost like the same Google DOJ risk, right? They both have a DOJ risk, but how serious is that for both of these companies, which is maybe stopping them from getting a bid? Google right here did get to 196, now back to almost 197.5. So that one also potentially having a bit of a intraday bottom. Dude, Steve is buying ETH right now. Steve texted me yesterday during the market close. He bought ETH on Robinhood again. And then after he texted me a screenshot of buying ETH, he said, "Can I just tell you that I'm going to have a giant bowl of Frosted Flakes and a whole milk tonight for a snack? Because they're great." And he literally spelled out the great with like 50 T's. If anyone knows the Frosted Flakes commercials, you'll get the joke there. And I'm like, who the heck takes a giant bowl of Frosted Flakes and milk as a snack? Like, this man comes up with a new snack every week. It was cheesecake last week. It was these rainbow cookies from the bakery the week before that. And now it's freaking Frosted Flakes. I'm like, where does he find the inspiration to find these new snacks? Donovan, thanks for the $10 super chat. Cutting down my super chat budget to pick up more Palantir. On a serious note, retail should not be selling right now. If anything, this will be a good to do another shakeout as in April before it's set up. Donovan, again, thank you for the super chat. You could send like a $1 super chat, so I appreciate you sending these super chats, but you not have to spend a lot of money on them. Just appreciate everyone being here every day. But I agree. I mean, like, I don't think retail needs to be capitulating right here. If you are worried about paying rent next month, genuinely, then yeah, you should sell some stocks because you should have enough money to pay your rent. right? And like you should not be like, oh my goodness, Palantir's dropping, Hood's dropping, I can't pay my rent. But if the rest of your life is secured in regards to the personal expenses you have to live, and this is money you genuinely don't need, but it annoys you whether it goes up or down, then that's a different reason for selling or not selling. Again, to me, it's also simple. Like, do you think we're going to get into a bear market? Yes, sell. Outsmart everyone by front running it and sit on some cash. Maybe you're a little early, but at least you don't have to deal with the downside of 30, 40%. If you're wrong, then you just have cash on the sidelines and you'll eventually be chasing this stuff higher. Like, it's inevitable. And so like if you think we're getting into a bear market, you sell. If you don't, you hold on and you deal with the pain of the volatility, which is what I think most people eventually have to deal with. But outside of that, I do think it's a very reasonable pullback. Bro has never heard of cereal before. I know what Frosted Flakes are. I couldn't believe this guy's eating Frosted Flakes, bro. He finds a new snack. Dude, put in the chat, what is everyone's favorite snack? Like, if you could have one snack for the rest of your life. I have to think on this. I don't know, dude. Like, what is one snack that people just like? Like Cheez-Its, Rice Krispies, Doritos. I mean, what is a snack? Ben and Jerry's, they do have legit ice cream. Goldfish. I also just bought a lot of snacks for my apartment, so I have some ideas on my mind. Cashews, I love cashews. Chocolate chip cookies, I love those as well. Yo, I've never been a Taki guy, bro. I've never been a Taki guy. Like the hotness or the spiciness of it. And I can handle my spiciness, but I just never. I like hot fries though. Andy's hot fries. Those I love. Some of you guys not in the States might have totally different brands as well. Okay, I've never been a Milky Way guy either. I'm more of a Twix guy versus Milky Way. Pistachios. Do you like those? Salt and vinegar. I've never loved salt and vinegar chips either. I never liked the vinegar flavor. Taki is like a super hot chip. For anyone that's seen it. Is this an American thing? I don't think this is an American thing. It might be an American thing, but this is what Takis look like. Jenny's salty caramel ice cream, totally addicted. Pretzel chips and peanut butter. That's how bad the market is. We're talking about snacks. Well, guys, what's your favorite snacks? You know, we don't need to look at those 15% down days. We can talk about what makes us feel good with snacks. Palantir 146.60, getting a little recovery right here. Cookie dough, Funyuns. I haven't had Funyuns in a long time, bro. I don't know. I have to think what's my favorite snack, but one snack for the rest of my life, I don't know. I want to say Oreos, but I feel like as much as I love Oreos, I would get tired of eating Oreos. But I do love Oreos. Dude, peanut butter is underrated with fruit, especially with apples. I know a lot of people are allergic to it, but that definitely is underrated. 634 on the S&P, Meta 737, Hoodie 104, Google 197. All right, so again, we are seeing green candles pop up. They're not really going that much higher, but they're not capitulating to the new intraday lows below that 1107 level that we've seen. And I think that's okay. Yeah, I think that's I'm trying to see if there's any other headlines that are real. Anything to look at tonight after the close, which I will be starting earlier again today. So at around 3:30. Let me take a look at some of the earnings. Do we have anything today? No, we have nothing. We have no earnings today. Okay, so tomorrow we have earnings with Walmart. That's a big one. Tonight we have nothing else. Walmart, Zoom, Intuit, Workday, and Ross stores tomorrow are going to be important. Today you have nothing. Someone said mayo cookies. Can we not even like imagine what a cookie with mayo would look like? I don't think I could actually stomach even the visualization of a mayo cookie, dude. That's just weird. That is just weird. All right, I think that's pretty much it, guys. That's what we got today. not much else to see. I don't see a lot of other crazy headlines. Again, there is not a headline that caused this downturn today outside of the continuation of momentum from yesterday being red. Tom Lee just tweeted, ETH inflected at 4,064 on Tuesday evening, right on schedule of midweek as called by our technical analyst. So Tom Lee did say we would have a bottom on ETH this week. We are seeing a little bit of momentum on ETH at around 4,200 right now. So Tom Lee's calling for about 4,060 to be a bit of the bottom. And so far, we are seeing momentum. Oh, we did have this piece of news that I forgot to mention. Google announced a multi-year deal with Steph Curry, which is kind of cool. It looks like he's going to be in a ton of commercials around AI and whatever new health technology they seem to be putting up. That's good for Google. Not bearish. But that seems to be the main headline on the Googs. Looks like we found a floor on a good number of tickers indices. Hopefully it holds. Yeah, agreed. We got to see. I mean, 11 a.m. feels like after attempting 2 times, this could be where some of the market decides to say, all right, that's it. But we're going to see throughout the end of the day. All right, folks, that's it for me. I'm going to go get a haircut, and I should probably pack for Miami since I didn't do that. And I leave in like 8 hours. So I'm going to go do that. Word of the day. What do we got? Don't know how to say this word, but what else is new? Etoliate. Shouldn't be too bad. Etoliate.
Etiolate.
Dude. I hate speaking. I swear I thought I was going to be okay on that. Like I genuinely... There is no double E. There's one E. Like, where do they get a double? Even if you looked at the pronunciation, I wouldn't have said E. I would have said atoiliate, not etoliate.
Etiolate.
No, sorry, I'm saying it right. Etiolate. How does the I and the O turn into an E and a? Like, don't tell me anyone understood that when I didn't understand. How do you do that in bit? Because like I'm a normal human being that reads words normally, but apparently the English language doesn't cooperate.
Etiolate.
To cause a plant to whiten or grow pale by excluding light. Excessive shade can etiolate emerging seedlings. Some specialty farms etiolate certain produce to achieve a more delicate aroma. Okay, for any gardeners in the chat, there you go. The red on stocks can etiolate all of our faces by making us pale. So that's also fair. But goodness, bro. What a word. What a pronunciation of a word. That's what you got. All right. Thanks for the super chat. Thanks for doing these today. I would have gone to back to bed, but I didn't feel like listening, but I appreciate. So I appreciate your coverage and I'd rather be here. All right. Thank you for the super chats. I'm leaving now so you can go to bed, and hopefully when you wake up wherever you are across the world, near the market close, we're not as red as we were in the morning. But it is what it is. It's volatility. It's the nature of the markets. You got to deal with it. As cliche as it sounds, it is part of the game. We are all playing this game. It is one big game. And this game, at the end of the day, it's going to have some nasty, ugly days in it. It will etoliate all of us. I probably still said it wrong right there. But on the other side of that red day tends to be a bit more green if you're in the right companies. And I think most of us are in companies that are good. Question is just dealing with the volatility. Palantir right here recovering a little bit from 142 to 147. Hoodie from 101 or from 99 to 105. And S&P was down 1%, folks. Now it's down 0.5%. So we were at 632. Now we're at 635. We are going to see by the end of the day if that one continues to hit red. All right, that's it. Thank you, everybody. Appreciate you. And I'll be back on the market close. We'll start a bit early at 3:30. And yeah, we'll start at 3:30. We'll end probably around 4:30, 4:45. So I'll be 15 minutes early. And we'll see how this market ends up turning out as we end out the show for today. All right. Thank you, everybody. Appreciate it. See you guys in a few hours. Bye, everybody. Have a good one.